Good morning, everybody. Good morning, Chef. Good morning, Tim. Nice to see you, David. Nice to have you back. Welcome to the family, man. Heard you made a decision yesterday. I love it. How's everyone doing today? You guys feeling good? Slow market this morning, right? Kind of stuck in between areas, doing things that don't fit our plans, or maybe they do fit your plans. Only you can make that decision. Good morning, Bobby T. Good morning, Alex. Joel, nice to see you guys. Having great conversations with my brother this morning, and it's pretty cool. And I wanted to show you guys what we do every morning. Buenos dias, David. So I'm looking at crude oil, right? And John and I are talking, and everybody knows that John Novak is the CEO. He wrote the software. He's been doing this for 27, 28 years. And we're just doing a chart read together. And we're both relating what we see to our personal trading plans. And it's kind of funny because this was my read, and I see, good morning, Snorri. And I see a bad top, right? And I see support that's already held and didn't make the goal. And I see support again acting as a termination condition. And I'm saying to myself, you know what? This just doesn't fit my plan. Good morning, PFI. Guys, this isn't a short that fits my plan. Not at all. If I look at the piece of paper that has my rules on it, this doesn't fit it, right? And then John Novak says, yeah, but with this divergence at the high, we're anticipating to take out this level. Good morning, Snorri, PFI, Chris, Debbie, Luciano. Gosh, I love it when you guys are wound up. And his chart read says that this continuation style is at least going to take out this pivot and probably go to the next level, guys. And I guess I'm starting the class with this because neither is wrong, right? Neither read is wrong. And we talked about it. Good morning, Sydney. And I said, I support your short 100%. Guys, I see his short. I can read the chart the way he's reading it. I understand exactly why he does what he does, but it doesn't fit my rules. And because it doesn't fit my rules, I made the decision to not take a trade. The market did go down. And to be honest with you, I was okay with that. I was okay that the market went down, that it didn't um, give me a rules-based entry. And that's what we're going to do today, guys. We're going to go through and we're just going to talk about building your plan. And I want to stress this at the beginning. Your plan has to be your plan. There are a lot of traders with a lot of experience in the traders chat room. There are a lot of people doing a lot of things that aren't this simple make you wait plan that I talk about in this room. But I want you to know that they've all gone through what you're going through right now. They've all gone through the process of learning to read their charts. They've all gone through the process of designing a plan. And I can tell you that the one common thread that each and everyone in that trader's room that you guys are infatuated with is they have a written plan. They have a plan that tells them exactly when to get in and exactly when to get out. And that's what we're going to do today, guys. We're going to start working on your plan, and we're going to do it with simplicity. So before we do anything, though, guys, forexfactory.com. If you are a crude trader, today is crude oil inventories. 10:30 a.m. They're going to release the reserves. We don't trade the news. I don't trade the news. You can trade the news if you want. Um, the only reason I check news each and every morning isn't to worry about what they say. It is to avoid the reaction. There are a lot of emotional people, right? And there's a lot of emotional people with deep pockets that move the market. And when these guys say something, these red high impact, that market can go nuts. And if you've ever watched an FOMC day, guys, you're going to see it at 2 p.m. today. You're going to see a bunch of traders have an emotional reaction to whatever the Feds say. And it's going to go nuts for probably like, it's every Wednesday, Snorri, unless there's a holiday, then they'll move it to Friday. If there's a Monday holiday, they'll move it to Friday. But every Wednesday at 2:30 a.m., crude inventories come out. So what does that mean? Knowing that the news is there, no, it lets me know. You did, Chef? Yeah. I think all of us have taken the trade on FOMC, hopefully on simulator usually. But Snorri, what this does for us is one, is it lets us accept that before the news is released, people are going to jockey for position, right? People are going to jockey for position to get into a point to where they can have the best trade. And the people that can move the market may not go with the trend. They may not go with it. So guys, crude can trade a little wonky during crude inventory days, and then when the inventories come out, you know that there's going to be a reaction, so you can choose not to trade if that's what you want to do. And then FOMC, guys, it's just financial suicide. Even if you're with the right initial direction, FOMC can make the market jump 20 points in one direction and then 50 in the other, and it literally happens in a fraction of a second. There is no reaction time. Your stops get slipped hundreds and thousands of dollars. So knowing that it's there, guys, that's all we're doing is we're saying, hey, let's stay out of the way. I don't care what they say. Let's just stay out of the way. And then, guys, we're going to take everything from today from the tutorial section. Guys, this is where the rules that I talk about come from. This is where, if you have any questions about NinjaTrader, the software user guide, look at that. Instructions. For those of you with testicles, instructions are written things that tell you how stuff works. I tend to ignore them over and over. But everything from screen captures to NinjaTrader how-tos to all these different things, rolling contracts, chart templates, market flow, all of these things. Good morning, Sea to Air. Guys, everything about NinjaTrader is here for you. And of course, if you have a question, ask it in class. I'll do my best to answer it. But we're going to get all of our great, I did not assume your gender, David. Those words are dangerous. I just said those of you with them. Has nothing to do with how you identify. Oh, and here we go. We just opened up a can of worms. Guys, keep it simple. I can't stress this enough. When we talk about high probability trend trades today, and this is going to be the first trade that we talk about, guys, not my break. We're going to talk about a high probability trend trade. We're going to talk about a trade with three rules. Guys, these three rules create three advantages. These three advantages create a trade, right? That's all it is. A trade is nothing more than momentum, a clear path, and an entry area. This is not the last trade that you will take. Guys, this is how you're going to get into the market as a brand new user. And I'm going to encourage each and every one of you in this room that's not hitting their goals. I'm going to encourage each and every one of you in this room that's learning to be consistent to focus on simplicity, to focus on three rules that happen on only two charts. It really can be that easy, guys. Your large chart and the workspaces provided to you by Nexgen is going to define direction, momentum, and areas. All of that happens with one bar, the most current bar, guys, and it's a broad stroke of a brush. It's going to give you the general temperature of the market. It's going to give you the overall opinion of the market. It's going to let you visually see what the people who move the market want to have happen. Your first two rules happen on the large chart. You will have momentum and a clear path before you ever turn your attention to your entry chart, your smaller chart. Embrace the idea that your only options as a day trader are rules met or rules not met. And if they're met, look for an entry. And if they're not, sit on your hands and wait for them to be. But when they are, we're going to go to the small chart, guys, and you're going to take one bar on the large chart and whittle it down to 15 to 30 bars on the smaller chart. You are going to pinpoint exactly where the market is likely to continue, create a window, enter at that window, and take a high probability trend trade when the rules are met, because that's your only option. Rules met or rules not met. So I spend the first hour of every day. If you're brand new with me and you're expecting something different today, you're not going to get it. I spend the first hour of every day talking about a high probability trend trade. The first hour is dedicated to simplicity. And I do that because the high probability trend trade teaches you to read your charts, guys. And there's nothing more important than learning to read your charts, to look at your indicators and understand what they're telling you. And in the beginning, you're reading your charts to look for these advantages, right? And then you're reading your charts ultimately as you grow with the software to find more advantages through the patterns that you recognize. But chart reading is a skill that if you spend 20 days focusing on the entry for the highest probability trend trade, you will understand where the market is likely to continue, and that's going to be your point of entry. You will understand where the market is likely to go using momentum and Fibonacci, and this is going to help you create a management plan that allows you to get the most out of your trades, and you will understand where the market is likely to stop, guys, and these are termination conditions. And termination conditions can kill a trend. Good morning, D-Rock. Termination conditions can stop the market cold in its tracks. Termination conditions can reverse the market, guys. So we're going to spend a lot of time making sure that we can identify them and that we don't trade into them, because that is a huge removal of advantage when you do. These termination conditions also create the highest probability trend trade anchor that we can have. When a termination condition, an area likely to stop the market, reverses the market, guys, then that trend trade that happens after, immediately after a termination, this is a trade that typically wins 70 to 80% of the time. This is a trade that creates confidence through the memory of success. This is a trade that's taught you to read your indicators, to understand what your chart is telling you. And guys, this is your foundation. This is your 30 feet of concrete that you're about to build your day trading skyscraper on. So let's focus on simplicity. Good morning, Alan. Nice to see you today. Let's focus on the absolute best of the best. And I'm going to share a secret with you guys. Here's your step-by-step path to becoming a confident trader ASAP. It really, this has been proven over decades, or at least since the chat room was a thing. And it begins with posting your pictures in the room, guys. Posting your trades in the room. Every time you're on simulator and you pull the trigger, post it in the room. If you lose, post it in the room. If you win, post it in the room. If you looked at your chart and you just weren't sure if there was a trade, post it in the room with a little annotation on it saying, Mark, what the hell's going on this chart? And we'll read it together, guys. And this is the second half of class, is we go through and I look at all your pictures and I answer all your questions. 15 hours every week, I'm live in this room, guys, and my sole purpose in life is to give you feedback on everything that you're doing, to give you feedback on the patterns that you see, the trades that you take, the advantages that you recognize, and the disadvantages that maybe you didn't recognize. And guys, it's this feedback that's going to help get you to where you want to be. You can't be expected to know everything as a new user, but if you sit on the sidelines and you never post a picture and you're hoping to become a confident day trader, guys, you're robbing yourself of this valuable tool, because honestly, Tiger Woods had a swing coach, right? Michael Jordan had a free throw coach. The more feedback you get, the quicker you're going to get to where you want to be. D-Rock and Chef, dropping them in the room right now. They're like, Mark, when that second hour starts, let's talk about these. The second thing is using your spreadsheet, guys, making sure that you're tracking everything that you do. So D-Rock, Chef, these pictures that you just posted in the room, hopefully they're making their way to your spreadsheet. Say, Mark, this is the trade that I took. This is what it was. These were my conditions. And then notes on the backside saying, this is what happened. And maybe you wait for the feedback and you say, this was what worked great. This is what didn't. And every morning, go back and spend 5 minutes. So did you guys do that this morning? Did you guys go look at what you did yesterday so that you can make a plan to do it better today? I skipped this step all the time, and it showed in my chart reading. So what did you learn from yesterday? Was it D-Rock or Chef? Gap theory got you yesterday, right? Are you focused on the gap theory today to make sure that you don't break that rule? Isn't that amazing how you can be one step better every day? And that's what this does, guys. You're going to recognize what worked, what didn't work, what made you nervous, what kept you calm. And you're going to recognize patterns in the market that are bringing you success. But more importantly, you're going to recognize patterns in yourself. You're going to recognize if you have a tendency to trade into termination conditions, or if you have a tendency to jump in without advantages, maybe you exit too soon. But each and every one of these, that little historical study is going to prepare you for the day and accelerate the learning. So embrace the idea that the spreadsheet is one of the most valuable tools that you can use. And then fill it with pictures, guys. We're going to learn the trigger line and the Fibonacci rules this morning for the high probability trend trade. And we're going to talk about keeping it simple, keeping it focused, and letting everything that we do revolve around advantages. You're going to simulate, you're going to practice, you're going to break all the rules, and you're going to make all the mistakes. And all I need you to do is when you take those trades is annotate the chart, guys. Write on your chart. I want you to get in the habit of typing a lot. Write your rules on the chart with arrows pointing to them being met. Don't just say I had odds favorable momentum when you have some weak triggers, because that's what the rule is. make sure that it's visually there. And what it does is it solidifies the look of your rules being met with the actual rules, and it creates recognition faster. Show your timestamps, show your prices so that I can see and line up on the chart where everything is happening. And then guys, if you haven't made it so that you can plot your entries, right click on your entry chart, go to data series, plot your executions, text and marker. And if your OCD doesn't allow you to do that, then circle your entries, right? Circle your entries, circle your exits so that I can see exactly where you're getting in and why you're getting in. Um, Annotating your charts gets you the best feedback. The more information you give me, the better the feedback becomes. So please, please, please do not skip this step. We don't want you practicing the wrong rules. A lot of people love to get lucky on simulator, make a lot of simulator money, buy a simulator house and a simulator Ferrari, maybe even get a simulator girlfriend, right? Or boyfriend. Guys, it's not real world. If you're getting lucky, luck runs out. So practice the right rules. Get in the habit of insisting that your rules are met. And then we're going to simplify, guys. We're going to break it down first hour, one trade, high probability trend trade, the absolute best of the best. We're going to spend an hour learning how to become chart readers. And I want you, if you have any questions, to raise your hand and ask for clarity. We had a very brave soul yesterday raise their hand on termination conditions, and I'm not going to lie, it turned into a lesson that gave about 20 people a little extra giddy up on terms. So be brave, guys. Post your questions. Simplify your plan. What are you going to commit to? I'm going to commit to my rules being met, and then you've got to learn what they look like. You've got to be able to recognize them so that they become easy. This is what your spreadsheet does on the second half, guys. These are client trades in the green section that I've pulled from class. These are trades that I can click on, that I can look at, that I can identify advantages, and the look becomes easy. The look becomes perfect. The look becomes um, really black and white almost. What am I looking for? This is exactly what I'm looking for. Every time I take a trade, so this is what I'm going to try to repeat each and every time. We're going to talk about the rules for that trade. Repetition creates recognition, guys. Repetition creates recognition. Have you ever watched a movie and thought, that's an okay movie? And then you watch it a second time and it gets a little bit better because you start to notice things. And then you watch it a third time and you're like, gosh, this was brilliant. Trading is the same way, guys. The first look at everything, you're not going to bring it all in. But the more times you see the same thing, the more times you see the same pattern, the easier it becomes to recognize. So this is our plan of attack, guys. Post a million pictures, ask a million questions, make my throat hurt by the end of it because I'm talking so much, but we're going to focus on advantages. We're going to talk about rules being met. We're going to talk about two charts, three rules, one trade. Let's become chart readers. Everything starts on the large chart, ladies and gentlemen, that broad stroke of a brush. And that broad stroke of a brush, the first thing it's going to do for us is it's going to define trend. If the background is green on a large chart, you're in an uptrend. If you're honestly looking to give yourself an advantage, you should only be looking for rules to be met for high probability trend trades long. And if the background on your large chart is red, you're in a downtrend. And really, if you want to have the highest advantage, you're only looking for high probability trend trade short, guys. The trend is established by people that move the market, deep pockets, people that we're not competing against. Let's do what they say is going to happen, right? Keep yourself safe, focus on the trend, and I'm going to tell you right now, rule one can't be met if you're not following the trend because rule number one says we must have strong trigger lines. And strong trigger lines mean that in an uptrend, your small triggers have broken above and away from the large trigger lines. Small triggers are two lines that create one trigger. They're solid, they're a little more narrow. Large trigger lines are dashed lines. Two lines create one trigger. Both should be wide and angled in the direction of the trend. In an uptrend, they should be going up, not right, right? They should be wide, not flat. And it's the space created between the two that lets me know that the odds are favorable for the market to continue up. And odds favorable momentum is what you're going to hear in class all day long, guys. Did you have odds favorable? Did you have odds favorable? Because when you have it, This is the most favorable look for buying pullbacks to Fibonacci support on a smaller, faster chart. You will be able to pinpoint where the bottom of that tail on a large chart is likely to happen. That is your likely to continue spot. This will be your entry for the highest probability trend trade, guys. And with all that momentum, the market is likely to push in the direction of your trade. In a downtrend, when the background is red, the smalls and large should be separated. They should be wide, angled in the direction of the trend. It's that separation that lets me know that the odds are favorable for the market to continue in the direction of the trend. You're getting very garbled speech. Is anyone else having trouble with the audio? All right. So, M, it may be you. There we go. Sometimes it happens, guys. But that's great. And I want to remind you guys, if the speech is ever gone or I'm talking and you don't see my screen, I'm human. Sometimes I talk with the mute on, and sometimes I forget to open up a screen. So always let me know. Hopefully we can get M back in and have no worries. Odds favorable, best of the best look for buying pullbacks to Fibonacci support. That's what these tails represent, pullbacks on a smaller chart. Best of the best look for selling Fibonacci resistance on a smaller, faster chart. Guys, rule number one is so easy to identify. This is the S&P. Do I have odds favorable momentum on the S&P, guys? Do I have separation between the small and large? This is how easy it can be, I promise. There's no separation, therefore, this isn't your best trigger look, right? A lot of you guys are saying ACH, anything can happen. What does that mean? That means that when the small triggers work their way inside of the large triggers, we've weakened the large triggers. And when we weaken the large triggers, good morning, Jose. Anything can happen up or down, guys. It's a crapshoot. The advantage of momentum is gone. History. Adios. Weak triggers happen before turns in the market. Weak triggers typically happen as we get closer to Fibonacci areas. Weak triggers rob you of the advantage of momentum, guys, and we know that we have to have momentum to begin looking for that second rule. Is everybody comfortable with that? Odds favorable momentum looks like scissors, open, ready to cut. Weak, hey, let's sit on our hand triggers, have the small inside of the large. Guys, this is the foundation for looking for trades, because I'm going to tell you right now, hey, good morning, Mulu. I'm going to tell you right now that odds favorable momentum breaks areas. Odds favorable momentum covers mistakes. And if you commit to this look, guys, it's gonna help considerably. But it doesn't happen all the time. Sometimes we have to be patient. We are professional waiters. 90% of what we do during the day is waiting for our advantages to be present. If I start on the left, there's separation. The smalls return, they work inside, and there's your reversal, guys. There's those anything can happen triggers. And even without the benefit of Fibonacci, we can see that reversal. It gets weak, creates odds favorable momentum. There's a tail, a potential entry. Off it goes to the races until they weaken and the market reverses again. Next-gen users, we can find our trades in between these two spots right there with that odds favorable momentum. The reversal gives us odds favorable. There's one of those tails. Down it goes. And then we get indecision. Good morning, Miss Mary. Then we get large triggers down and small triggers up. Or we get the trend is up, but the triggers are down. Guys, this indecision are buyers and sellers fighting. Somebody's trying to win. One side wants it to go up. One side wants it to go down. But the advantage of momentum never presents itself. Next-gen users, you don't ever have to get caught in consolidation again. Next-gen users, you never have to predict where the market is going to go. You can simply wait for the advantage of momentum. It's going with the trend. Look for your opportunity. These guys will duke it out. New users try to predict whether it's going to go up or down. Well, support hold, it should go up. Well, the background's green, it should go up. No, but wait, my triggers are red, it should go down. and get chewed alive, right? Get chewed up. But ultimately, they'll sort it out and get you back to odds favorable momentum. So 90% of what you do during the day, sitting on your hands, waiting for advantages, and it all starts with that advantage of odds favorable momentum. Is everybody good with that? That's usually a pretty easy one for new users. Separation means strength, right? Awesome. Once we have that strength, let's make sure that the path is clear. Guys, this is the next piece of the puzzle. Trend is easy to recognize, green or red, right? Momentum is easy to recognize. They're either separated or they're not. A clear path means that there are no termination conditions. So a clear path means that there's nothing in the way, nothing between me and my target, guys. And a clear path is such an advantage. And I want to show you why. I took some pictures about what it means. Whoops, I think I accidentally deleted them. Fibonacci creates reactions, and that's the easiest way to say it. The large investors, the people in charge, the people that move the market, guys, they see these lines, they see these areas, and they react to them. And where the heck is my picture? Well, I lost my picture. That's okay. Hey there, Amira 2015 $sign. Welcome to the classroom. Guys, these Fibonacci areas are where the people that move the market are going to take profits, where they're going to enter positions. These areas that may stop the market, these potential termination conditions, these are where reactions happen. Next-gen users have the advantage of not having to get caught by these reactions. It says get the tattoo, Ron. Areas that may stop the market are red Fibonacci resistance, blue Fibonacci support, yellow one-to-ones. And guys, if you're brand new to the room, this is a great map for what you're looking at on your chart. It can also be these divergence lines, guys. A divergence high is a magenta line that prints off of a pivot. And a pivot just means that the market went up and down. So the market goes up, and then it comes down, and this divergence line will print from the top of that pivot if there is a loss of momentum in the move. If the market goes down and then back up, if there's a loss of momentum in that move, this cyan line will print from the bottom. Guys, a pivot with divergence is nothing more than a loss of momentum. That's it. It's not a trend stopper. It's not a market mover. It is nothing more than the sellers were in charge and the buyers took their momentum. And you see it in this line that prints in about the third bar up. And the buyers were in charge and the sellers stole their momentum. That's all these lines mean. Divergence is a loss of momentum. And we can't use it as a termination condition because it doesn't print until the third bar. So we're going to use these areas, guys. We're going to use these areas and we're going to make the determination whether or not we have a clear path. And it really is a simple recipe. I'm going to try it with the first picture first. There's two things that have to happen in order to determine a termination condition, guys. The first thing is, and welcome here. Welcome in. Love these indicators. Let's learn how to read them, right? Let's learn how to read them. Guys, when I reference price in the room, I'm referencing these dynamic Renko bars. So these bars in the moment are what's happening in the market. They are the literal, this most current bar tells me exactly where the market is trading. 45.0550, 45.0550. And it's this bar that has defined the trend, right? It's this bar that defines momentum. It's also going to be this bar that defines termination condition. And it all begins with that bar reaching an area. If price reaches an area, if those dynamic Renko bars come down and touch support in this case, the only thing that you have to do to understand whether or not it's a termination condition is ask yourself, where are the trigger lines? Price trends down, reaches support, the trigger lines remain above. No more short trades, guys. It's an area that may stop the market. It's an area that may create an unfavorable bounce, and it's an area that may create a fight between buyers and sellers that you don't want to get caught in. So that's all there is. Price reaches. If the triggers don't break it, guys, sit on your hands and be patient for just a minute. When do we have a clear path? When the small and the large triggers, both lines of both triggers, get through the area. So up here, price reached support, none of the triggers went through. Guys, we have no idea what's going to happen in that moment. We're not in control. We can hope it breaks, or we can hope that it reverses, but in the moment, we don't have the information to let us know what it's going to be. But we do know that price reaches the area and the triggers are above. Therefore, we won't take a short into the area because we don't have a clear path. Termination condition is true. Ultimately, the small triggers smash through with that odds favorable momentum. When the small triggers get to the other side of an area, whether it's support or resistance, and you have odds favorable momentum, this area has the potential to break, but it's still not a clear path. This is what we call a 50-50 look. 50% of your triggers are through, 50% are not with odds favorable momentum. Guys, it has the potential to break, and strong triggers break areas, but it's not considered broken. The path is not clear until both the small and the large get to the other side of support, and now it behaves as resistance. Now the path is clear. Now you have odds favorable momentum and a clear path. And guys, there's one of those tails. There's one of those high probability entries taking you all the way down to the next termination condition, taking you to the point where the market is likely to go. You're going to be able to pinpoint this entry, guys, on a smaller, faster chart, but it's the large chart that leads the way. The large chart defines the trend. The large chart defines the momentum. And here the large chart told you that the path was clear because we hadn't reached support and my triggers had cleared the previous fib. Guys, give me a Y in the room if you're with me on this recipe. Price must first reach the area. Whoop, there's my untitled. Oh my gosh, and I think I just closed. No, I didn't. Let me close this untitled workspace. We're going to go through examples. Don't worry, guys. We're going to talk about it all day long. Price reached Fibonacci support. All of my trigger lines are below support. Give me a Y if you see it. The only thing that I'm 100% sure of right now, guys, is that I'm not taking a long into this area because it may stop, reverse, create a bounce. Here it is looking in the rearview mirror. Price reached resistance. Absolutely none of the trigger lines broke through, and look how the market reacted. Guys, crude oil is just a little bit stuck right now. This area had the potential to break but didn't, and this area held. In this area, it looks like it broke, but it never got odds favorable momentum, and now it's coming back up. You guys don't have to get caught in these areas. There's no reason to. My smalls aren't above the large in an uptrend. I don't have odds favorable momentum. None of my triggers have gone through resistance. I don't have a clear path. Guys, does that make sense? It either is or it isn't. Price reaches support. None of the triggers have gone through. That most current bar says, wait just a second and let's look at the reaction. Guys, you're going to see termination conditions all day long, and some days it's going to frustrate you because 90% of what you do is reading charts. 90% of what you do is waiting for advantages, waiting for the advantage of momentum to be coupled with the advantage of a clear path. If you were in a long position, you can see the fib in the distance as an exit point. And if you weren't in a long position, price reaches resistance. In the past, that when the trigger lines are wide, it's momentum. Absolutely. So David, don't confuse momentum with terminations. They're two separate entities. And let me show you. Momentum, whoops, let me go to this picture right here. Momentum is defined by the trigger lines. I don't need any Fibonacci areas on my line on my chart to understand when I have momentum. So this is rule number one, separation between the two. That's the first piece of the puzzle. Does that make sense, David? Awesome. So termination conditions have absolutely nothing to do with momentum when we identify them. They have everything to do with the price bar touching the area or a tick or two off, right? And then asking yourself, where are the trigger lines? So you may go into one of these areas with odds favorable momentum, but if none of your trigger lines get to the other side of resistance, all you have to do, David, is pause. Just stop. No more long trades. Does that make sense? They're individual. They're separate from one another. And then from that resistance, it pushes all the way down to Fibonacci support. And once again, look at where your triggers are. This lets us know that even with the small below the large, even with a downtrend, right? What the trigger lines tell us, when price reached support and none of them went through, we're sitting on our hands and we're waiting. We're being patient. Guys, this is where new users get antsy because they forget that they're professional waiters and they want to be traders. Well, the termination condition works down here and takes you right up to Fibonacci resistance. It takes you to that divergence high. And it takes you to a second Fibonacci resistance. And then once again, guys, none of the trigger lines go through. So our only option is to sit on our hands and wait. So there's three instances, guys, and you see this a lot in markets that are consolidating. Watch this. Exhibit A. Whoops. You can see support to resistance to support to resistance. And then, guys, it sure looks like resistance broke. Both the small and the large got above the area of resistance. Notice how resistance begins to behave as support. Odds favorable momentum. Unfortunately, it didn't give you guys an entry. And that happens sometimes. Sometimes you don't get an entry. Sometimes the money isn't yours. Be patient. It will be eventually. But when the termination condition holds, the market reverses. Small get below the large get wide, angled in the direction of the trend. There's separation between the small and large. All of your patience pays off, guys, because here is a potential entry for the highest probability trend trade that you can take. So let it be simple at first. Price reaches, no triggers, no trade. Price reaches, the smalls are through, but the large are not. Guys, we're into an area that hasn't broken. Price reaches no triggers, right? In order for this area to break, both the small and the large must get to the other side. And guys, it's just not happening. Now we have weakened triggers. Now we have not all of our triggers through resistance. David, do you see how that simple rule keeps you from trying to go long, maybe at this mid-band, because the area hasn't broken? And guys, it takes a little time to recognize these in the moment. It really does. And you're going to overthink it in the beginning. I know I did. Allow it to be simple. No matter what the momentum, right? No matter what the direction, if price reaches an area and none of your trigger lines go through, sit on your hands and do nothing. Wait for the reaction, guys. Either wait for it to reverse or wait for both the small and large to get to the other side so you can look for opportunities. And it really is that simple in the beginning, guys. There's only two options for brand new users. Triggers, there it is. Triggers reach the area and none break. Guys, there's no clear path. Sit on your hands. If the small and large get through the area is broken. So D-Rock, when I'm talking about fibs, this is a great question. You're basically asking, but Mark, what if it misses it by a tick, right? What if it misses it by 2 ticks? Do I still respect it? Let me show you how fibs are made. I love this because it's a great segue, guys. Remember when I said that Fibonacci areas are where people react? It's where the deep pockets investors react. Fibonacci areas, those yellow 1-to-1s. Guys, these are the areas that are based off of thousands of pivots in the past. They are based off of where the market has already reacted. When you open your software, D-Rock, it analyzes data set for the last 10 days, and there's literally thousands of individual Fibonacci calculations coming off of every pivot in the market, guys. It does it historically. It creates synthetic timeframes. It does it forward. And the genius that John Novak came up with was the algorithm. The algorithm goes through and it weighs out which are the most important, which has the highest concentration and of the most important Fibonacci levels. And it's all of this mess, all of these thousands of lines that come together to create this one red line. So D-Rock, it's very much an area, right? There may have been 170 lines 2 ticks above, and there may have been 8,000 lines 3 ticks below, but this is the highest concentration right there in the middle. So if it's a tick off, it's very possible that that's as far as it's going to get, right? And that same notion, even if price goes 3 or 4 ticks beyond, it still may react. And this is why we use the trigger lines, that momentum indicator. If price reaches that reaction point and the triggers stay below, you don't have a clear path. But if both the small and the large momentum indicators get to the other side of that area, now the path is clear. Does that help everybody on termination conditions? It really can be this simple in the beginning, and I'm telling you, avoiding termination conditions. Termination conditions pull more money out of traders' pockets, and there's no reason to because it's such a simple recipe now. And then, David, the part that may have gotten you just a little bit was talking about momentum into the areas. The original recipe, guys, the KFC, is no triggers, no trade. Both triggers, look for odds favorable momentum. There's your tail. Let's giddy up to the upside, right? Strong triggers break things. This is your third option, guys. This is exiting the realm of high probability. Because when you have odds favorable momentum, that best of the best look, that market that's likely to continue in the direction of the trend, and your small triggers aggressively smash through a Fibonacci area, it's like a freight train going. And even though the stop barrier is down, it's difficult to stop. So when the smalls break through but the large haven't, 50% of my indicators are through the area, 50% are not. This is an area that has the potential to break. But because it's only potential, it's not a clear path, right? If my wife and I go out to dinner and I walk her up to the steps, I have the potential for a good night kiss. But until our lips touch, guys, it's not a good night kiss. So the potential is there. Fib. So anytime I say area, David, great question. Thank you for that. Anytime I say an area, I mean fibs, one-to-ones, divergence highs and lows. And it goes back to that little map that we talked about. It makes sense to me. Guys, Novak men are horrible at analogies. They really are. But sometimes it just makes sense to me. So, David, that's such a great question. Anytime I reference areas, it's going to be one of these. These are the areas that we see on our charts. Why do we call them areas? Because it's just an area where things can happen. Anytime I talk about trend, I'm referencing the color. Anytime I talk about momentum, I'm referencing the look of the trigger lines. Does that help a little bit? I hope so. So this is my area. Fibonacci resistance is my area. And David, this is very much how it's going to happen live. Price is going to reach Fibonacci resistance, and all of the trigger lines will stay below. Therefore, in the moment, I'm doing absolutely nothing. Alan, I can't say it or I'll get edited. I'll get put in timeout. I don't recommend. Absolutely not, David. Absolutely not. That would be like, would you recommend not wearing a seatbelt for a new driver because that's just one more thing he has to think about? See, horrible analogies, guys. I told you. Absolutely not, David, because The second you start altering the software, you start altering the likelihood of success, right? So what if I deleted this fib down here with odds favorable momentum? It had the potential to break, but do you see how it didn't? Do you see how ultimately the market reverses? Fibs are important, man, and they're gonna keep you safe, David. They're gonna give you advantages. And the noise confuses you, David, because you're new. It's not because there's too much to look at. Well, there is for the new brain, right? The more time you spend at the software, the more simple you keep it, the easier it becomes. And guys, we talked about the noise yesterday. Let's do this again. On your large chart, it's the most current bar, but you can't see the triggers. So guys, on the most current bar, what is the trend? David, what's the trend? It's up. Do you have odds favorable momentum, David? Are the smalls above the large? No. Have we reached Fibonacci resistance with absolutely no trigger lines through it? Or are all of my trigger lines above the line at the top of the most current bar in the uptrend? See, David? So what we can ascertain, there's a good word, is that I'm in an uptrend without momentum or a clear path. Does that make sense? Do you know what doesn't matter? All of this. Who cares what happened at 5:48 a.m.? My most current bar. Sat word? I don't know what that means. Sorry. So eventually, you'll realize that it's that most current bar that is the absolute most important. And if we look at it, I don't have a clear path, nor do I have momentum. So I'm just sitting on my hands. Is it going to break or is it going to hold? David, I don't know. And that's the best part about what we do is when you realize, because look at this, odds favorable momentum. Oh, I got you now, an SAT word. Yeah, it is. Even with odds favorable momentum in an uptrade, David, do you see how none of the triggers broke through this area? And that area held. That fight happened. And then ultimately, when the small and the large get above it, we consider the area broken. And it's okay to sit on your hands and do nothing until the path is clear. Now the small and large are above resistance. The area is broken. It's clear. And that clear path is great right until we reach the next termination condition. And guys, this is what frustrates new traders sometimes. But Mark, there's only 10 points in between terms. Well, do you know what that means for us? That means that we're doing nothing. That we're just going to do nothing in the moment, guys, until we have that clear path. Whoa, what did I do to my chart? I don't know. Guys, if you ever make your chart look crazy like that, go back to templates and just reload it. Guys, is everybody cool on these termination conditions right now? If price reaches it and no triggers break, do nothing. And if that termination creates a full reversal, guys, if it goes from down to up, right, from smalls inside to smalls above, and see how this termination condition was good right up to that one? Look at this picture. We know that there's no more short trades. This keeps us safe. The reaction is right into resistance, and we know that we can't take a long trade because all of the triggers are below resistance, and then the sellers push back, and then the buyers push back, and then the sellers push back, and the buyers push back, and the sellers push back. Next-gen users, you never have to get caught in the middle of this because ultimately that termination creates a full reversal. Both of my trigger lines are above resistance. It behaves as support. My smalls are outside of the large, and that's your highest probability trend trade. It's not this trade that's going to define your success, guys. It's your ability to do absolutely nothing when there is absolutely nothing to do. I took that same picture this morning. Termination to termination, and the triggers were absolute garbage. My rules say don't go up or down. The only other option is to do nothing. And this is the hardest thing that you'll ever do as a day trader, guys. Look at the reaction. If we can sit through the reaction and do nothing, we can take advantage. When we ultimately get odds favorable momentum, when we ultimately get a clear path. So guys, this is the first two steps on the large chart, right? Using the areas to determine whether or not the market is likely to bounce, reverse, create horrible reactions that we want to stay out of. There is one small chart termination that I want to talk about, guys. This is the only small chart termination. Sometimes we'll have a clear path, and the triggers are down, and the trend is down, and everything says down, and you want to take a short trade. And sometimes you'll even have odds favorable momentum, and the path is clear, right? And the momentum is up, and everything says go, go, go. This final termination condition happens on a small chart. Does everybody remember divergence means a loss of momentum? We know that divergence is true when the cyan line prints, when the magenta line prints. So if I get 3 cyan lines from a low, I have 3 losses of momentum, and 3 losses of momentum in the same price range may terminate a trend. Guys, you're going to see this on your smaller, faster chart before you ever see it on that broad stroke of a brush. These 3 losses of momentum become more powerful when the small triggers work their way inside of the large. Now we have anything can happen triggers coupled with 3 losses of momentum. And it becomes more powerful still when your third pivot is higher than the previous from a low, it's a head and shoulders pattern, or your third pivot is lower than the high from a high there, lower than the previous at a high, head and shoulders pattern. So 3 divergences may terminate the trend. 3 divergences with weak triggers is stronger. 3 divergences with that head and shoulders is stronger still. You said 3 on the small on crude oil. Let's take a look. Nope. So right now we have 2, right? Alinsky, I might get that goodnight kiss, or I might not. Might is a dangerous word because might gets you thinking about the possibility. This area might hold, right? Check it out. This area might hold, right, Alinsky? It's fun to say. That rolls off the tongue. And if I start thinking that this area might hold and I get my brain, I'm gonna look for a short trade off that resistance, ultimately I get slaughtered. I think this area might hold. And I lose again. Right? So potential is great, understand, but I like you guys to speak in both terms. If this area holds a third divergence prints, then I'll begin looking for shorts when the rules are met. If this area breaks above these 1-to-1s, then I will look for my rules to be met for long trades. And Alan, I'm not beating you up on these, Alinsky. What I'm doing here is I'm illustrating how it's easy for your brain to make a decision that doesn't fit your rules, and then it's even easier to stay married to that trade. Has anyone ever done that? Has anyone ever seen weak triggers at resistance and a big red bar and said to themselves, oh, I'm going short because my small chart's giving me that look? Right? When the reality is, I got married to this short and I took it and lost it, when what I should have done is said, hey, I should be thinking longs because all my triggers are above the fib. And guys, that's normal, right? So what we're going to try to do is create a scenario where it's simply rules met or rules not. You're back on micros, Mary? That's not Mary. Who's M? I'm not sure who M is. All I can see is the M. But it's not micros or large contracts, right? All it is rules met. And guys, the biggest challenge is doing nothing. It really is. It becomes easy to read indicators. Oh, hey, Mark B. Nice. So guys, 3 divergences in the same location may terminate a trend, right? So, Alinsky, our choices are, oh, look at that. 1, 2, 3. Let's see how far it pushes. And let's go to the next step. I know 3 divergences may end a trend, But I also know that support with no triggers through it might stop the market cold, right? So guys, if I can't go long because of these one-to-ones, because of three divergences, and I can't go short because of support, what do I need to do right now? Oh, Mary, it's nice to have you back. Just sit and wait, right? Isn't that easy? No, it's not easy. It's hard as hell, guys. Because when you're doing nothing, and your brain's going to wander. Play a video game, read a book, draw something. I can't go short into support, guys, and I can't go long into these one-to-ones. But here's the magic in Nexgen. Are you ready? I always say, are you ready? I don't know why. Is I know that I've got to get through one of these areas, right? I've defined through termination conditions the areas that have to break before I start looking for a trade. Does that make sense to everybody? This is a great termination condition lesson. I know that I can't go short into support, and I know that I can't go long. So what that means for me is that I either want to be above here or I want to be below here to have the highest chance of success, right? And then just accepting the fact that sometimes trading is boring. Someone told me the other day, we were talking about golf, and they said great golf is boring. Great golf is ugly. It's not pretty. Guys, great trading is boring. Let's get to entries. I'm going through. Is everybody comfortable with termination conditions? We're watching them stop the market cold right now. Cool. So these three divergences, guys, are simply just going to help you recognize when your large chart is turning a little bit, right? When your large chart may be changing direction, but you can't see it on that broad stroke of a brush. All right, so we've got odds favorable momentum. We're trading with the trend. We have a clear path now. Guys, let's get in at the right spot. Let's get in at the best of the best area. Let's get in at the point where the market is most likely to continue. Let's repeat this process every day until it becomes easy. You played on a professional level? Well, for those of us that think that you always, let me elaborate then, Story. Great golf is beautiful. I agree 100%. But great golf, Snorri, would you agree that it's not always hitting as far as you can? It's not always taking the risky shots. A lot of times it's taking the high probability shots and minimizing your misses. Is that fair? And that's awesome that you played on the professional level. We need to get together for lessons. I need lessons so badly. But a lot of the times, great golf is knowing when to take the chance and when not to take the chance, right? That's what chart reading does for a trader. Understanding when there's so many advantages that you may take a chance. And my disclaimer was there, Snorri. I suck at analogies. I really do. I stink at analogies because in my head they make sense. But guys, you have advantage. Not about the boring. Fair enough. I rescind my comment about boring golf. It's not exciting using a 7-iron instead of a driver. How's that? To the average new golfer, I played with a guy 2 days ago. He shot par. He shot 72. It was his best round ever. I shot my worst round in 3 months. I shot 100. And I'll tell you, he didn't take chances. He just played consistent, smooth advantages, and it worked out. So let's talk about the final one, guys. The entry area, the area where the market is most likely to continue. Mary, relearning statistics helped with your trading mindset, helped ingrain the whole high probability, having a statistical advantage. Absolutely. Absolutely. And you're smarter than I am. If you're relearning statistics, I don't think in math terms, guys. I understand advantages, but I don't calculate all that stuff. I don't. Mary, my wife's like you. She's working on her MBA right now. And she's taken these statistic classes and these finance classes, and it's like reading Greek. It's completely a foreign language to me. I can't even begin to comprehend it. But I do understand momentum visually, and I do understand a clear path visually. And now I'm going to get into the market where it's most likely to continue. And I'm going to do that visually because I'm a right brain kind of guy. You guys that are into mathematical will talk about moving averages and how when price deviates from a moving average, it corrects itself ultimately. And that's what gets us to our entries. That correction, when price pulls away from these triggers, it likes to come back. The high probability trend trade says that we're going to use a limit order. We're going to wait for the market to come back to us. And that market's going to come back to us at an area inside of favorable large triggers. You guys remember the lesson? What's an area? Our areas for high probability trend trades to originate are going to be red Fibonacci resistance or blue Fibonacci support, yellow one-to-ones, and then now we're going to add this midband, a magenta midband for shorts and a green midband for longs. Fibs, midbands, and yellow one-to-ones. These are the origins for the high probability trend trade because they create a bounce point, guys. It's like a brick wall you're throwing a tennis ball at. And this is going to be your look on the small chart when everything says up. When you have odds favorable momentum and nothing in the way, your small chart's going to agree. But we're going to wait for this little group of yahoos that fight the large crowd, guys. The large crowd defines direction, momentum. It defines the areas. When we enter with a pullback on the 5-1 chart, we're anticipating the large crowd winning. We're anticipating the momentum winning. We're anticipating the clear path prevailing. There's one of those SAT words again. But this small crowd's going to force a pullback. So our rule number 3 says that we're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. And guys, the words are important. A pullback is the small retracement in price. The area is fibs, midbands, one-to-ones, and then favorable large triggers. Let's define those. Favorable large triggers means that your large triggers on your small chart, as well as your synthetics, the ones that look like they have little 90-degree angles on them, are one on top of the other, overlapping. They are hugging one another. Two snakes riding piggyback, whatever gives you the visual. The tighter these triggers are on top of each other, the smaller your window of opportunity. The smaller your window of opportunity, the least amount of risk you're going to have on a trade. So for the new users, I love for you to stay focused on favorable large triggers. It's going to create the least amount of risk as you learn these entries. So everything says up, the path is clear, my small chart has strong triggers. I'm looking at those favorable large triggers and I'm looking at the areas that are falling within them as they come up like sharks about to breach. I need the small crowd to force a pullback, guys, and that begins with a reversal bar. When the small are above the large on the 13.2, do both lines have to be above? Ideally, yes. D-Rock, you're saying for odds favorable momentum, right? Cool. So in order to have odds favorable momentum, I need separation. I can't have separation unless there's the space, right? So what's it mean? You can see as they accelerate, the small triggers are moving from right to left. These lines come out before these lines, right? This is the beginning of the acceleration, the absolute best of the best. And as they decelerate, you'll notice that the smalls, the right side works in, the left side's not quite. I'll still look for trades here, but I understand that the momentum is decreasing, right? It gets wider as it increases, it gets narrower as it decreases, and ultimately when both lines find their way inside, that was a great question. That was an awesome question because, guys, if they're working right to left and this line's out and everything's working up, you're in the acceleration phase. And Snorri had a great picture of this yesterday where he had a potential entry right here in the acceleration phase. I would rather take a trade in the acceleration phase than the deceleration phase. Does that make sense, everybody? At the beginning of the move rather than the end of the move. When the buyers are super excited rather than when they're getting bored. Great question, Em. The background changes when these small triggers begin to break above the large. It'll paint the background green. When the small triggers break below the large, it'll paint the background red. And this is why you can't have odds favorable momentum if you're not trading with the trend. Absolutely. You guys are killing it on the questions today. Thank you for that. Keep them coming. Everything says up. The path is clear. And now I get a reversal bar on my smaller, faster chart. Guys, the beginning of the pullback. My rules say that I'm going to use a limit order to buy or sell. A pullback to an area. Fibs, midbands, yellow 1-to-1s inside of favorable large triggers. Guys, let's create a window of opportunity. For a long trade, your window of opportunity is going to extend from the highest point of support inside of favorable large triggers to the lowest point of support inside of favorable large triggers. Notice that I use the word inside of favorable large triggers is key here. They need to be inside. David, you are 75% there on that. And let me tell you why. Because you used the word every time. Every time the triggers get in, the market reverses. Well, that's not true, is it? How about this, though? Every time the triggers weaken, anything can happen up or down, right? And this is why the rules are put into pieces, right? This is why the rules aren't every time I have a clear path, the market has to continue up. It doesn't. We're never in control, guys. So we speak in absolutes regarding our rules. Every time price reaches an area and my triggers are below, I choose not to take a long. Every time my momentum starts to go away, it doesn't mean that it's going to reverse, but I do know that that loss of momentum can create a pushback. So I choose to only trade when every time the small separate from the large. And Alan, amen. Every time my rules are met, I'll execute a trade. And then Alinsky, 3 divergences in the same area. All this did is it pushed us right back to support with every trigger line miles above it. Do you see it? Keeps you from taking the long, but it pushed us back to support. When all the triggers are way up here, this support's likely to hold, isn't it? And then Cream White, you're asking me, Mark, is there a way to break my rules? Mark, is there a way to get in a little bit above or a little bit below? Cream White, with experience, absolutely. But if you make the choice to take a trade outside of favorable large triggers, Cream White, can we agree that you're not taking the highest probability entry? It doesn't mean that it's the wrong entry, but it means that you're forfeiting that advantage of being inside of favorable large triggers. Guys, you're going to find trades that break your rules all day long, but they have so many advantages that you're not worried about it. And what Cream White just showed here is that if I have the advantage of momentum and I have a clear path and my entry area is 3 ticks outside of that large trigger, guys, I'm taking that trade every time because these advantages are unbelievable, especially if that area is Fibonacci support likely to hold because all of my triggers are above it. So absolutely, guys, you're going to deviate from the plan as you grow with the software. But as you're brand new, Alinsky, those are your synthetics. And your synthetics, my synthetic triggers are the large triggers from my large chart. And what we find is that when these work together over here, it creates an advantage. It gives you that smallest window of opportunity. So when the large and the synthetics are one on top of the other, we're looking for the areas that fall inside, guys. We get a reversal bar. Identify your favorable large triggers, identify the area inside, and activate a limit order at the top of the window for longs or at the bottom of the window for shorts. Why do we get in at the top? Why do we get in at the bottom? Because your large chart is screaming in the direction of the trend. Your large chart has absolutely nothing for it to bump into to create a bounce. So when that reversal bar prints, I identify my trigger lines. I identify the areas within. I want you guys to see this. Top of the triggers to the bottom of the triggers, the window of opportunity for a long is from your highest point of support, meaning the closest line to where it's coming from, to your lowest point of support inside of favorable large triggers. For a short, I look at the bottom of my triggers to the top of my triggers, and then my window of opportunity is my lowest point of resistance to my highest point of resistance. Guys, when there's one line inside of favorable large triggers, it takes all the guesswork out. It either goes from here or it doesn't. When there's multiple lines, the window grows a little bit, and this is why it's so important that those triggers are one on top of the other, because the more splayed out they are, the bigger that window becomes, the more risk that you have. You're going to activate your limit order at the top of this window, guys. And at that point, you are 100% powerless. You have controlled everything that you're in control of. You have controlled having the advantage of momentum. You have controlled having the advantage of a clear path. You have controlled having put a limit order at the area where the market is likely to continue. You did not control the pullback. That was up to the people fighting the trend. You didn't control where the triggers were, but you recognized that they were favorable. And you didn't control what areas are in there, but you could identify that from this mid band to these one-to-ones, this is my window. And guys, the market may bounce off any one of those. But we're in at the top because of the momentum, because of the clear path. Guys, this is your trade. This is your trade that typically wins 70 to 80% of the time. And now let's talk about what's scary to new traders. We created a window where the market is likely to continue, which means that you have to be prepared that it may go to the bottom of the window. You may see negative numbers. You may see red ink on the paper, guys. That's okay. We still have every advantage in place as long as that market is trading inside of the window. You also have to accept that anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time, guys. And this is a cost of doing business. This is the market is wrong. The only thing you're going to say is next because of all those advantages that you had. 20 to 30% of the time, the market is going to take you out of a position. And next-gen users, you manage your risk before you ever manage your profits. And you're going to be able to put a stop, a protective stop outside of that window of opportunity, right where the market shouldn't go. You don't have to hope or wish or want. You simply, it hits it, you dust off, and you wait for the next opportunity. Guys, this is one of the hardest things for new users to accept, is that even the perfect trade fails now and then. You trade 50% with a 3-to-1 win ratio. All right, so 75% winners? I love it. It's pretty much impossible to lose money at 75% winners unless you let your losers get bigger than your winners, right? Oh, okay, so you have to have a 3-to-1 return? May not be the same on futures. And I think so too, Alan. Losers remind me that I'm not in charge. Losers remind me that the people that control the market don't care about my opinion or my hopes or my wants or my wishes. My losers remind me that I just have to keep taking the same trade over and over. Common mistakes new users make. Panicking when it doesn't hit your entry and you see that fluctuation on a smaller chart. Guys, if you jump in and chase trades, you have decreased your profit making and you have increased your risk. The other thing I see a lot is people seeing small triggers turning against them on a smaller, faster chart and saying, well, the momentum's gone, I can't take this trade. Guys, this is a smaller, faster chart. This is a refinement chart. And 99 out of 100 times, those small triggers have to turn against you to get you back to the best of the best spot. Large chart leads the way. Large chart defines areas, momentum. It defines trend. Small chart is just an entry chart. It's just a refinement tool getting you back to the best of the best area. Guys, this is a trade that I'm going to take 1,000 out of 1,000 times. This is a trade that I'm going to train my brain to see. This is a trade that I'm not going to question. I'm going to develop trust in the methodology because it creates a statistical advantage. And this is a trade that when I learn to follow these rules, I'm typically winning 70 to 80% of the time, right? So guys, this is your high probability trend trade. This is your first 30 days with Nexgen, your first 20 trading days. A lot of you are going to see other people do other things, and you're going to want to do what the other people are doing. Guys, focus on this for 20 days. Get into the market at the right spot, because when you do, it creates manageable trades. It creates manageable losses. It creates manageable wins. Great entries create manageable trades, guys. And when it comes back, because you waited for the pullback, you're going to have the least amount of risk. When it starts to go in the direction of your trade, you're going to reduce your risk below that reversal bar. You're going to have even less risk on the trade. And because you waited for the pullback, you have the absolutely largest potential for winning. The biggest room to your profit targets, guys. So we can minimize risk first and then maximize profit potential through rule number 3, through refining that broad stroke of a brush. Are there any questions about the high probability trend trade? Guys, you can study this trade. Let's see if the S&P gave us any opportunities to study a trade. I'm going to cheat a little bit. I don't want you guys getting mad at me, but I'm going to take off the areas. We're going to focus on momentum. Whoops, wrong one. And we're going to focus on the entry itself, picking the best of the best spot. Is everybody cool with that? Can we play make-believe for just a second? I'm going to take all my areas off, and I'm just going to run triggers. And guys, you can do this too as you practice entries. So let's go right here. I'm going to circle this tail with odds favorable momentum. And I'm going to go to my smaller, faster chart. And look how it pulls back to support inside of favorable large triggers. Guys, this is part of the trust process. What I want you to do is I want you to get in the habit of scrolling back 10 days. When you have odds favorable momentum and a clear path, circle the tail. Lines up with a pullback to support. And look at this. The next one, if you miss that one, pulls back to an area of support inside of favorable large triggers. And with all this momentum, if I scooch it up one more, it pulled back to support inside of those large triggers. So guys, this is a pattern that repeats itself every day. And as you scroll back and look for those entries, and these kind of happen, the small R outside, it's not the best momentum. But if I scroll back, what's it look like on a smaller, faster chart? Kind of overruns everything. As we lose momentum, it pushes higher. There's a great lesson. Without odds favorable momentum, that market may push higher. But guys, you can do this. You can do this to study where the opportunities were. You can do this to study at the end of the day. If you feel like you might have missed trades, go back and go through this process. Circle those tails. Is it possible that at the tail end of momentum with everything up, that this could have been a potential entry to get us to that next area? But do you see how it's a reversal that pulls back to the area, guys? And with that losing momentum, it goes even lower. It goes right to the bottom of the window. So you're able to study this each and every day. You're able to go back, study it historically, make sure that you're following the rules. Make sure that you're recognizing the rules. And if you're not recognizing the rules, it's okay to ask a question in class. But this is how you're going to study, ladies and gentlemen. This is how you're going to get so good at what you're doing. I'm looking for my entry chart real quick. Is go back and circle tails and see if they fit the rules, guys. And remember that we're not trading tails. What we're trading is the pullback to the areas inside of favorable large triggers. But we're studying them historically by circling the tails. And I want to cover one more thing because you guys are talking about risk to return, right? To reward ratios. Everything happens from the top of the bar, right? The most current bar. And I want you to see how close we are to the potential trouble spot here. D-Rock, you can. Best trades, more contracts. Guys, when we get to that top of the bar, you have 8 ticks to your trouble spot. Give me a Y if everybody sees it. And a lot of you are going to say, I don't have room to make any money. My risk to reward sucks. I'm not taking that trade. Right? Because there's only 8 ticks to get there. Guys, this is really part of the amazingness of what we do. We're not trading from the top of the bar. We're trading from that potential tail, from that area of support up to the problem area. And that 8 ticks, if you get in the habit of waiting for the best of the best, turns into, actually, I think it's 28, not 38. It turns into the potential for almost $300 rather than $80. So this is one of the things too, guys. This is why waiting for those best of the best entries creates such an advantage. Minimizing risk, maximizing profit potential. And then all you have to do is, let's go back to it, learn the looks so that they become easy. Through repetition, learn the looks so that they become easy. Make sure that you can see the same thing over and over so that when it happens in the live market, you're comfortable and capable of taking that trade. An easier way to do it, this is where I give you guys gifts. Here's your high probability trend trade, guys. This is a trade, this is only defining the entry. Print this out and put it on your desk. Hold yourself accountable to having advantages. Hold yourself accountable to avoiding opinions. Because when these rules are met, all of them, it's the highest probability trend trade. The market coming from a good top or bottom, a termination that creates a full reversal, it's not mandatory, but it means that you'll have to manage it if those 3 divergences print, right? The rest of them just define the entry, guys. And then here's that exact same list. Putting this one in the room for you. Here's the exact same list with pictures stolen from the resource materials. Here's your termination that creates a full reversal. That's a good top or bottom. There's also the video here of John Novak spending 45 minutes helping you understand it better, guys. Trading the edges, tops and bottoms. Watch that video. David, did you watch that one last night? Make sure you crank up the speed on it. Go to like 125 or 1.5. John Novak has a very methodical mechanical cadence. And you can speed him up a little bit. What does odds favorable momentum look like? It's only one look. And if it's this look, it's anything can happen. Here's that termination condition lesson. When it's not broken, when it has the potential to break, and when it's broken. And then there's that window of opportunity. All the parts defining what it should look like. The reversal bar. It identifies the triggers. It identifies the areas. And it also reminds you that the areas outside of the favorable large triggers are not in the window of opportunity. So guys, there's 2. And then finally, here's your simple trading plan. New users, you're going to be excited to do more. New users, you're going to want to take all of the trades instead of the best trades because it's going to keep you busy. So if you're brand new with me, Alinsky, Adam for All, who else is in here? M. I know I've got more new people. Guys, if you're brand new, if you are brand spanking new, this is a great way. There it is. I knew I was missing one. Sorry about that. This is a way. It's designed to optimize your chances of success as a new user because, guys, confidence comes through the memory of success. And if I missed you on the new people, I apologize. I'm looking through and seeing, but sometimes I miss it. Chris L., this is for you, brother. Right? Snorri, this is still for you. And PFIs for you, Chef, it's for you, guys. You're all new together. Embrace it. This is a stepping stone in your learning journey. It's designed to optimize your chances of success with a high probability trend trade. And then, guys, that 50-50 trade, that potential to break trade. I've added that into this to help keep you busy. Through simulation, study, class feedback, notice it's underlined, and continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading indicators. What does that mean? That means that when you're really good at the simple stuff, you're going to begin to see more opportunities. When you learn how to manage the simple trades, the best entries, you're going to be able to manage through experience differently. You're going to be able to hold for larger moves. You're going to be able to get out of trades where the conditions are changing through your chart reading. But guys, in the very beginning, this is your plan for consistency, and it starts with never fighting the large chart direction or triggers. This is going to eliminate for the new user, I would say probably 50 to 60, 70% of the common mistakes new users make. Guys, I can tell you right now in my own personal trading, never fighting the trend eliminates a lot of opinions. Never fighting triggers, hoping an area breaks, eliminates a lot of opinions. All you're doing is defining your entry. There's your checklist once again, reminding you what it takes to get into the market. It's very mechanical, guys. It's pragmatic. There's no room for opinion. I want you to embrace the idea that there's only two options for the new user. Rules met or rules not met. That's it. One gets you into a trade, one keeps you out of a trade. Allow it to be that simple. Once you get into a trade, you're going to have to do something with that amazing entry, right? Every great entry creates a management opportunity. In the simple plan, your management is just as pragmatic as your entry. It's just as mechanical as your entry. It's designed to remove your opinions and your fears and your hopes and simply keep it if-then scenarios. And the first one is, if my rules are met, then I enter the market. I'm in at the area of resistance inside of favorable large triggers, and my stop is about 4 or 5 ticks beyond the window. Typically 12 to 14 ticks in a futures trade. And at this point, I'm either stopped out of the trade, the market comes up, it hits my stop, I allow it to be wrong with dignity. It's a small loser, it's a manageable loser. It doesn't mean that I'm a horrible trader, a bad person. It doesn't mean that I even screwed up my rules. It just simply means that the market is wrong. I'm going to dust off and wait for the next trade because small losses are a normal part of a positive equity curve. So I'm either stopped out or the market blesses me with a reversal bar in the direction of the trade. And if it does, I manage my risk even further. My new stop is 2 ticks above that reversal bar. In a long trade, my stop is 2 ticks below that reversal bar. This is it. If then, there's nothing for me to do. I roll my chair 6 feet back. I wipe the sweat off my palms. I'm either stopped out for a small loser or the market decides to go to my first target. And brand new users, my first target is $100. And for those of you that need a 3 to 1, this is going to drive you nuts. My first target is $100 for a couple reasons. The first reason is that when I've got odds favorable momentum, it's hard for the market to hit the brakes that quick, especially when it's already met the rules for entry. And the likelihood of hitting $100 is pretty high. It's also $100 because when I win $100, that goes into my account, and I hear NinjaTrader tell me that I'm a winner. Target reached. Mark, you're the best ever. Children will sing songs about you, women will want you, and men will want to be you. That's what $100 does for me as a brand new user. I feel amazing, and I'm excited, and they can't take that from me. That's my $100, and my new stop is break even, which means that I have nothing to lose. Guys, I'm $100 richer and I have zero risk on the trade. And the whole idea of putting that silly stop at break even is it makes it easier for me to sit on my hands and let the large chart lead the way. It makes it easier for me to accept that with momentum and a clear path, it's likely to hit my next target. and it keeps me from emotionally jumping out of a trade or moving my stop too quickly. And I'm going to tell you guys right now, you're going to have a lot of break-even trades. You're going to make $100, break even on the second. As a brand new user, you're learning to read your charts. You're learning to trust your charts. This is a great way to do it because when you can't lose, it's easier to hold for the win. And if you hold for the win, it's only a $200 target. You're trading two contracts, one at 100, one at 200, guys, but that's $300. And I do this math every day. $300. If you do this, if this is all you accomplish in the day, every day, consistently, that's $1,500 a week, guys. That's a $6,000 month. That's a $72,000 year, right? And what if, rather than looking for more trades, looking for riskier trades, looking for lower probability trades, you turn that 2 lot into a 4 lot and you trade the exact same plan, the exact same consistency, the exact same methodology? Well, now you're at $144,000 a year, right? And what happens when that 4 lot becomes a 6 lot, right? And then an 8 lot, and then a 10 lot? And you're not taking more trades. What you're doing is you're taking the best trades. You're relying on a statistical advantage to get you in. Base hits pay bills, guys. Base hits pay bills. It doesn't always have to be a home run. Your chart reading is going to let you know when it's time to jump ship. Your chart reading is also going to let you know when it's time to turn that base hit into a home run, right? You're going to use your chart reading. You're going to use the idea that strong triggers and a clear path get to the next area. So you'll get paid as you increase, but you'll embrace the idea of a runner. You'll let your chart reading begin to tell you when it's okay to hold for bigger moves. Guys, this is my first hour every day. You got to get ready for work. Quick Ninja Trade. Where's the best place to go to learn how to operate it? Okay, so what you're doing, David, is when you clear your charts, you're hitting that red X, right? You're like, I'm done for the day. Let's get rid of them. Cool. So here's what you need to do. First of all, let me give you two parts. First of all, what you need to do to get all those workspaces back is go to the resource page and download the indicators, rerun the indicators. And that's going to put all your workspaces back for you. And then when you close them, David, what you need to do is you're going to go, well, in 8, it's going to say workspaces. So instead of Xing out, close the workspace. And then when it asks you if you want to save it, say yes. But your, let me open this up. From the, oops, I opened the resources page. The software user guide, this is your NinjaTrader how-to 100%. This is like literally the Bible on using NinjaTrader. Opening, closing, building charts, downloading new workspaces, clearing out your cache, connecting to the account. This is anything and everything that you need. And then, of course, you can always bring your questions to class, but what you're doing is you're Xing out rather than closing the workspace. So on the NinjaTrader 8, whoops. On the NinjaTrader 8, closing workspaces, you're going to go to workspaces and you're going to hit close and then save it. And then you'll have it when it's time to reopen. Have a great day at work. Let's keep studying so that we can get rid of that 4-letter word. Ugh. You're welcome, man. And then, guys, that's the first half of class. This is what we do every day. We talk about advantages. We talk about them. We talk about how to get in with them. We talk about how to identify them, right? We talk about when they're present, when they're not. And then we get into the second half of the day, guys. And the second half of the day is going to be me looking at your charts. It's going to be me. You're welcome. We're going to talk about what you've done. We're going to relay it back to the 3 advantages. This frustrates people sometimes because you're going to see people take trades that don't fit these advantages, guys. Their plan isn't your plan. They've grown a little bit beyond where you're at. That's okay. But for the sake of the class, guys, if you post in a momentum trade, or if you post in an HVA trade or an edge trade, What I'm going to do is I'm going to relate them back to the advantages every time so that everybody gets the visual lesson, which is why it's so imperative that if you're taking trades outside of a high probability trend trade, that you tell me why you did what you did. Because if you're not looking for help, guys, if you're not looking for feedback, you're just showing off, right? So tell me what you're doing. If you've been in my classroom for 6 months, I know what you're doing. I'll talk through it. But if you're brand new and I can't tell what you're doing, make sure that you tell me so I can give you that great feedback. I'm going to put this picture in the room again. I'm going to stretch my legs, guys. I'm going to go do those little arm circles that you see old people do, right? Hey, Mulu, have an awesome afternoon. I will see you tomorrow. If you do anything this evening, if you do any market replay, or if you watch a video and you have a question, take a picture, bring it to class tomorrow. I'll make sure that we get you answered in the first hour. Guys, I'm going to take 5 minutes and I'm going to go stretch my legs. And when I'm done stretching my legs, we're going to come back and we're going to look at your pictures. We're going to talk about them. We're going to look at the live market, what it's telling us. If you have specific questions, post them in the room. If you have pictures, post them in the room. I'll see you guys in 5 minutes and we're going to finish strong today. Y'all, I am back. So the first hour, we did a lot of great things in the first hour, I think. Let me close some stuff here. Everything in the first hour revolved around advantages, right? Everything revolved around, excuse me, momentum, a clear path in an entry area. We learned the trigger lines for when it's okay to trade, and you guys have been simulating, posting pictures. So now we're going to give the feedback, guys. Now we're going to go through and I'm going to talk about everything that you've presented in the classroom. Just so you know, I have to scroll to the top, if you can see that. I have to scroll all the way to the top to get to what you guys have done, which means that I'm going to go back and forth on questions. Um, and it may take a second for me to get back. I always tell you guys, if I miss a question, if I miss a picture, just let me know. Let me know and I will get back. And then guys, I want to share, this is the first picture that I put in there. This is mine. My rules said that I couldn't go up, and my rules said that I couldn't go down. And the only other option was to do nothing, guys. And for me, that's difficult, right? To do absolutely nothing. And then I did the little follow-up to that, where you start to form opinions based on it, right? Where you may start letting one perceived advantage outweigh a disadvantage. And that's okay. But this was red, and it was a pivot stop out, and the small were below the large. And this is where a lot of people start making that opinion. I'm going to go short when it pulls back. But that termination condition said just sit on your hands, and ultimately that market went up, guys. So um, opinions, they're like something, I forget. All right, D-Rock, let's see what you're doing today. Whoop, they're going to meet me at TechSmith in 3 seconds. Here we go. D-Rock, odds favorable momentum, clear path, pull back to resistance inside of favorable large triggers, money, money, and then you're absolutely right. That was another potential entry. And you didn't enter because you hesitated in fear of loss after just winning one, and that's fair. And D-Rock, the next step, man, that next growth piece is what you're going to do, and this is pretty cool. And guys, I see this, and when I see it, it's amazing. Check this out. Let me take a picture of your picture. Did it bounce around, Chris, when those inventories printed? This is your trade, right, D-Rock? And eventually, that's going to be your target on this trade. And here's the coolest thing ever, is what you're going to do ultimately is you're going to get in here at 84, and then at like, I don't know, oh no, that's 64. At 44, you might say, you know what, I'll take profits here on one of my contracts, but I'm holding for the fib on the second. And then when you see the rules met, you're just going to add that contract back on and take it down to the fib. And I think this is one of my favorite things about what we do and the rules being met or not met is it means that you get paid twice in this range. You literally double dip going through. And guys, it takes a while to be able to do all that in the moment, but this is where you're headed. And there is nothing more fun than entering the market on the perfect trade and then adding on contracts and getting paid just a little bit extra as it goes to the fib. And this is where everybody's headed, but it all stems from great entries, man. And your great entries set the tone for everything, which is pretty cool. Nice trade. Beautiful trade. Rules based. And then Chef. All I hear is South Park. Hello, children. Odds favorable. Everything's cranking up. All right, Chef, let's talk about it. I'm going to assume that the coffee kicked in, right? And you were previously indisposed. But Chef, that's your best entry. Do you see it? No divergence, strong triggers, tiny window of opportunity. This is the one that you should have taken. And then we get to, now we're starting to lose momentum a little bit, divergence prints. But this is still a good looking trade. Notice how the window of opportunity is beginning to expand though. And then by the time we get the second divergence, Chef, my small triggers are breaking inside of the large, right? And this is just the man, it's your small chart's telling you that things are fizzling out a little bit. Um, and it's not a bad entry, but it's fighting a lot more. Does that make sense? You've already had two losses of momentum. Your small triggers are weakening. You do have support. And then, yeah, your better entry is going to be at that area rather than right here. And then your risk is defined and everything's managed. And did you give me an after picture? Let me get up there. I should just open like 10 pictures and then go through them because that's D-Rock. So let me go and let's see if yours, did we get an after picture? We didn't. That's okay. I think it went up though, didn't it? I'm scrolling back and forth, guys. I'm all over the place. It was successful. You got out with a small win. Perfect. And then the lesson on that is that odds favorable momentum and a clear path sure does go a long way, doesn't it? Do you see how you could have gotten paid a couple times on the way into your entry, though? And great job. Stop where the market shouldn't go. Nice trading, dude. All right, next one. And I believe this is you again, Chef. So you say you traded into a termination condition. You didn't realize until after the trade. Cool. So great job. Great job going through and analyzing. What else was wrong? So let's look at it. You had a termination condition at the top. Do you see it? Let's talk about everything that we see. Termination at the top, not going long, absolutely. Termination at the bottom, not going short. See how flat your large triggers are too? You can't have momentum with flat large triggers. It's a fact of life. This is what happens during indecision. Look at how wonky they are. Whoa, what just happened? Guys, I think Discord just booted me. Hold on just one second. I know you can hear me, but you can't see me. I'm on my way back. I promise. Nobody panic. We're all good. All right, guys, you got me back. So a couple great lessons, and you know that you traded into a term, right? And that's one of the biggest one. Learn to sit on your hands and wait. I love it. And then hopes, you moved your stop, and you got lucky. You dodged a bullet, Chef. But is this how you want to trade with all that stress? Can you hear me, everybody? Not at all. But I'm glad that you made the mistake. I'm thankful that you made the mistake because what a great lesson, right? And guys, this is such an important part of what we do. You have to make these mistakes. You have to break those rules. You have to just go, oh my gosh, what was I thinking? In the moment, you were thinking you were going to get paid short. But when you take a deep breath and you go back and you look at your annotations, and even better, you go through and you re-annotate after the trade, amazing, Chef. That's the stuff that people that are on their way to becoming confident traders do. That's the stuff that people that really are focused on advantages do. And even though it wasn't the right trade, I think that was such a great opportunity for you. And it's an opportunity for everybody to take the lessons. So thank you for posting that. It's not always easy to post mistakes. All right, odds favorable momentum, room to run, didn't hit price at resistance. D-Rock, do you remember yesterday's lesson on the gap theory? Hey, Miss Mary, have a great day. It's nice to see you back in here. If you need anything, post charts. Make me help. I love helping. D-Rock was like, you know what? I want to set up a lesson for the new kids today. That's beautiful, isn't it? Isn't that like the best looking termination? And look at that, even divergences verifying it. Guys, this is a strong bottom. Full reversal, odds favorable, chock full of awesomeness, right? D-Rock, can you tell me what the challenge was? Going back and looking at it now. If not, that's okay. Cool. So guys, let's talk about the gap theory real quick. The gap theory says that if price pulls away from the synthetic triggers, and that means the large triggers on your large chart, when price accelerates away from them fast, like rockets away, like it does off of a good bottom. If there's room, if there is a full bar's worth of room between the top of price and those large triggers, it's likely to snap back like a slingshot. So what happened on yours, D-Rock, is price accelerated all the way to that mid-band, smacked into it, and those large triggers remained below your reversal bar marker in the moment. So if you look at it, do you see how there's room for a full bar to get back to those triggers? This is the gap theory, ladies and gentlemen. Price accelerates and hits a mid-band or Fibonacci areas. It's likely to close the gap back to those large triggers. On the first run, it does it, closes it right to the large triggers, and it's happening again on the second. And you notice that that's the point where the market started back up, D-Rock. Do you see it, everybody? So the gap theory keeps you patient. It's a great bottom, but it keeps you from jumping in. And do you see how the triggers are split? It goes back to that favorable large triggers idea as well. When they're split, is it going to be this one or is it going to be that one? And then D-Rock, just so you don't feel alone in this world, let me show you something. Dun, 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 dun. I actually have a picture labeled split triggers. Hey, Gene, take care. You trade in determination, example posted. That's okay. You know it now, right? So you're one step closer to not doing it again. So D-Rock, let me show you this one from my spreadsheet. And it's called split triggers. Doesn't this look almost exactly like your trade? You see those large synthetics down there? And I'm telling you guys, this is such a common pattern that when those triggers are split, you just don't know if it's going to be the top or the bottom. So it takes away that advantage a little bit. And that's what got you, D-Rock, was the gap theory. Price reaches. See how the triggers are below that white line, that reversal bar marker? It's likely to snap back. It's likely to snap back. And then here it is kind of after the fact. Price accelerates, hits the area. There's a full bar to the triggers. Guys, this gap theory isn't designed to get you trading counter trend. It isn't designed to do anything more than help you exercise a little bit of patience and wait for that best of the best. So D-Rock, thank you for posting that. It was a great read. It was a great bottom, and that's where just a little bit of patience pays dividends. And then who's next? Alan, let's see what you're doing. Alan says, when everything is screaming off of support with odds favorable momentum, he'll take a quick little snapback to the area and continue with the momentum. Guys, it's not a high probability trend trade. What Alan has executed here beautifully is a momentum style trade. He's taking advantage of the momentum. He's taking advantage of the direction. And he's taking a little, he lets the areas break, and he trades a pullback to the area. It's a different style trade, but it all begins with odds favorable momentum. Beautiful execution, Alan. And then Gary, smalls below the large that you're breaking through, no divergence, pull back to the mid-band, rock star entry, quick profits. And then when you get that divergence and everything going up, you take your exit. Lower divergence. Did it continue down from there? because it looks to me like the pullback to resistance. What was that? Crude oil at 911. Let's go take a look real quick. I just want to see if it did. It may not have. Crude oil at 911. Dun, 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 dun. Nope, that was the end of the show. Sometimes I like to check these out and see what they did, and it looks like it may have. Let's see if there was any indication. Not really. You got the best entry, it made the manageable trade, and then it probably would have gotten the average user break even, right? $100, get out break even, you're good. And then that third divergence that's higher is what started pushing it up. Great job. I never said never second guess. I say read your indicators, right? Read your indicators. What are they telling you? Just take it. If it's right, take it. Rules met. Rules met, rules not met. Guys, it takes all the pressure of being right or wrong off of you. It takes all the pressure off. These are my rules. They're either met or they're not. That's all I can do. And then Gene split, but let's look at his trading into a termination. And you know what, guys? This is one of those instances. And Gene, I wish you were in here, but you're not. Odds favorable. We didn't quite reach the area on the large chart. But we did reach, oh, yeah, we did. There's fibs right there. Looks like they updated right there at 8 a.m. So that termination creates a loser, guys. Rule number 2 could have kept them safe. There's that fib update. Momentum after a good top. Jose, you get in on the snapback after the termination and ride it all the way down. Nice job. And with all that momentum, these areas had the potential to break, but I don't think you're ever going to be mad about 16 points on the S&P. But D-Rock, do you see how it was like 2 ticks off? It happens sometimes, guys. Great trade, Jose. And then right into the termination, I think. I'm not even sure that was 50-50, Jose. That was close, but in the moment, split triggers, and it closed the gap back to the large ones. I'm glad it worked out. That is some great chart reading for management, Jose. Some great chart reading for management. Market flow signal. Alan, oh my gosh, I totally forgot to answer your question. I just kind of made it funny earlier. Means market flow. This is what we call a market flow chart. You don't need it yet. Focus on your rules being met, because if you try to trade this chart, you're going to mess it up if your rules aren't met. And let me show you why. He traded into a termination condition, and that's not a market flow signal. So he broke rule number 2, but he tried to justify it with a misunderstanding of an extra chart, too much information. So guys, I will talk about market flow charts all day. I don't personally use them, but I think that there's a lot of advantages to be had with them if you use them properly. And I'll always talk about it, but learn your rules first. Keep moving, change lanes later. I like it. That's your trading plan, guys. Get the best. You'll change lanes later. And then Gene again. Directly into a termination condition. And the gap theory. Great recognition. He's not in here. But guys, this is the effectiveness of the class. We've seen Gene twice in determination conditions now, and that's totally cool because Gene's working hard, right? Look at him. He's on simulator. If he doesn't take these trades into the termination condition, he may never learn to respect them. So I love that, guys. When you make mistakes, post them in the room. And even more importantly, identify that these termination conditions have the potential to roll stuff, right? Gary loves to take pictures of his rules not being met because it reminds him, my rules are in place for a reason. My rules are in place because they create a statistical advantage. And when I don't have odds favorable momentum, I can't go short, I can't go long. All I can do is sit on my hands and do a whole lot of nothing until the advantages return. And that's the best chance for success. Then Jose, the momentum is down. You did have a good top, momentum, and that should have been your exit. I don't know. I don't think there's anything wrong with getting paid, man. And you got greedy and held too long. That happens sometimes, right? Hey, Jose, making the decision to trade into termination conditions, right? I'm seeing that a lot. And I don't disagree with it. And guys, I'll never tell you that your trades are wrong. Jose's been a chart reader long enough to know that this is a fib with no triggers through. Jose's been a chart trader long enough to recognize that this is a problem, right? But he's weighing out the advantages from his chart trader, and he's gauging it, and he's making intelligent decisions based on his chart reading, based on his own personal experience. And guys, this is why I never say that that's the wrong trade. We'll talk about advantages and we'll talk about disadvantages. His disadvantage was a termination. His advantages were all the other 1,000 things that supported that down move. And notice that it begins with odds favorable momentum. And I think that that's the key that I'm trying to get. Odds favorable momentum. Weak triggers, the long doesn't work, right? Strong triggers against the trade, God, it's just financial suicide. I'm glad it worked for you. And you kept taking longs all the way up. Against the trend, against momentum, into fibs. There's got to be more information because to me, all this says is I hope this holds against odds favorable momentum. I hope this holds against the trend. I hope this holds against that divergence pushing it down. I hope it holds with all of my price and triggers below support. I'm glad it held. I'm always rooting for you guys, but man, that's a lot of hope going into fighting the trend, fighting momentum. And then Jose, the termination condition, decides to beat you in the butt. All that momentum gives you the first push down, and then the third divergence says, it was a good shot, Jose, but I'm going to give you that third divergence so that you can take a couple ticks. I think it's a great shot from a good top. But again, there's that termination condition, guys. We're seeing a lot of these today. We're seeing a lot of trading into lines that may stop the market. Dano, what kind of trade is this? Small loss. When the bar prints, so it's here in the moment. It's here on the most current bar. So D-Rock, if everything is going down on the most current bar, it'll be above it because the only way that you get a reversal bar is if it goes up, right? And then once the next one starts to print, the only way to get a reversal bar is if it goes down. So let's see if we can find a live example. The bars are going up, so the only way I ever get a reversal bar is if this bar goes down. If this bar goes down. Does that make sense? So it'll always flip to whichever side creates the reversal bar. Well, on your picture, D-Rock, it's already over, right? So it's already after the fact on the gap theory. Let me find it. I don't remember. Was it this one? Cool. So your reversal bar marker would have been above the large triggers. But since it's already happened, now your reversal bar marker, well, I can see because it created a full bar. After the fact, there was a full reversal bar, and that's when it hit the triggers, was at the reversal bar, right? So in the moment, all I can do is look for where it is in relationship to it. And then Dano, let's go back to yours, my friend. What kind of trade is it, Dan? I noticed that you didn't write any rules on the chart. So I'm just curious because it's not odds favorable momentum, and that's totally cool, right? And it's not a clear path, and that's totally cool. And it's not an area from inside of favorable large triggers, and that's totally cool. But what got you in with the triggers up? What got you in with the small triggers up and everything above coming off of support, right? And Dano, you don't have to answer me. But this is one of those times, guys, where your rules help me understand where your line of thinking was. So 3 divergences on the small chart outweighs support that held with small triggers up and large triggers up and above support and small triggers working their way above support. Do you see where I'm going with it? And then your large triggers are up here and you're coming right off of a PSO. So I'm not saying that it's the wrong trade, Dano. So that's the problems that I see with it because I'm obligated to point out the issues. What else do we see? There's one divergence. There's a second lower divergence. And Dano, I think it becomes just a little more conservative. You actually have 1, 2, 3, 4 divergences, right? Or 3 divergences. The smalls get below. I think this pivot is, and the close below the small triggers becomes a great opportunity because this is your lower pivot. And when it closes below, it's a little easier than jumping in all the way down at the potential problem area. This is just the reversal bar marker from the larger chart, whoever asked that. Alan, Alinsky. You're welcome. Not necessary. For me, this goes back to that whole noise thing. That's just noise to me, but to Dano, it might be perfect and exactly what he needs. So Dano, I'm obligated to say you're fighting a lot to get into the trade, and then I am just as obligated to say I think it's a good chart read, and I just think that the entry could have been a little more refined. Even if you take a little stab back to the smalls and get it right at the smalls as it stabs back, when they start working their way down, right there where the mid band and the small triggers come together is going to help you reduce risk. Yeah, just a little soon. I like the read, I really do. Were you aware of what could have gone wrong? That's all I like people to know. Because when you are, yeah, it makes it easier to make decisions, doesn't it? When your chart reading lets you know what your challenges are, it gets easier to make decisions. So I like it. It's not my trade, but I like it, and I understand why. And I think that you just could have gotten it a little better. And then Paul, in the same scenario, he's looking at it, but he waits for the one that pulls back here. He waits for the one where everything agrees. And it's really the same idea, right? And we know that he hit his target because Dano, you hit your target. Great job. And then Chef. Arrgh, Chef went full pirate on me here. Oh. No, they don't, Chef. It's gone. Um, yep. How many times have we seen termination conditions for the win today? What do you think, guys? Been like 7 or 8, right? And then, Chef, can I show you one more thing? Oh, and you sad tromboned it. Nice job. Womp, womp. Hey, Chef, this is your window of opportunity, right? from the lowest point of resistance to the highest? Isn't that where the market's likely to continue? So even on that basic concept, doesn't your stop have to go up here? And this is one of those things, if this area is going to break, wouldn't it have been awesome to get in with the lowest possible risk at the highest point, right? I still think trading in determinations is a pretty bad idea, but look at how big that window of opportunity is. It's huge. Huge. From 17 to 32. That's 15 ticks just to stay inside the triggers. And then you got to be another 4 or 5 outside of it. So thank you for posting. Guys, we're watching termination conditions pull money out of accounts today. And that just answers your question, didn't it? Rule number 3. Stops where the market shouldn't go. And then, Chef, let's expand on that a little bit, right? If price pulls to one-to-ones and all of the trigger lines below it, is this area likely to hold or is it likely to break, right? Is this a termination condition? Absolutely. I'm going to go through the whole thought process if you can. Let's turn it into a chart read. The first thing that I'm obligated to say is, come on, Chef. All right, got that out of my system. I'm just kidding. I'm messing with you. So let's look at it. Momentum is down, strength is down, trend is down, and we hit an area where a reaction may happen, right? Do you guys remember when we talked about that, when we talked about termination conditions? Oh, hey, D-Rock, have a good one, man. Remember when we talked about how these are the places for the reaction? These are where the buyers may react, where the sellers may take profits. So isn't that exactly what happened, Chef? It reacted. What was its reaction? Its reaction was that it pushed it all the way back to those one-to-ones. Your momentum indicator stayed down. Your trigger lines didn't move, right? So the reaction happened. Close the gap to the large triggers, close the gap to the one-to-ones. Right at the top of your window of opportunity. And when it hits this one-to-one and the triggers continue down, then you get into a position where you can begin to expect more down. Does that make sense, Chef? And I'm not saying trade into a termination condition, but I'm saying that fibs create reactions. And this is where the reaction happened, guys. And it's the same thing with the gap theory. It's the exact same thing with the gap theory. When it hits that mid band and those triggers don't follow, we anticipate a reaction. And there's your reaction. And then you have to gauge whether or not it's still advantageous to look for the direction of the trend. And I'm not saying trade into terminations. I'm saying, but ultimately you'll get into these chart reads where that may become a trade for you. Potentially. Nice picture. Great lessons coming off the pictures, guys. That's all we can hope for, right? Simulate, post, talk. Simulate, post, talk. Rinse and repeat. All right, Pineski. Where'd it go? I just deleted your picture. Do you know why I deleted your picture, Paul? Because you hear me, but you don't listen. Give me that one. It's just easier. And sometimes they push up, right? No, it wasn't a termination condition, Paul. Let me amp this up a little bit so we can see it. Magenta one-to-ones aren't a... No, that's not a termination condition, is it? I don't even have those on my charts. They can create a bounce, right? But let's look at what really happened. Weak triggers, So a bad top gets us back to the midband, right? And when we get back to the midband, we have weak triggers. They're not outside, don't have odds favorable. I have a loss of momentum on my small chart corresponding with weak triggers, and it just pushes it higher. That's all it is. I've never said that in the history of anything. Lower divergence makes a good top? Okay. In my own personal world, it takes three divergences. And you had it. You had three divergences on the chart, on your small chart. But man, a good top doesn't override a lack of momentum into a mid-band when it's not a termination condition, right? It doesn't override divergence. And then just one more thing. I guess if you waited for the signal, you're good. And it just pushed up higher. That's all it was, dude. It was just losing momentum and it decided to push higher. It's not a bad look. Not even termination conditions. It's just loss of momentum pushed it a little higher. It happens sometimes. But I will disagree that a second divergence creates a good top. Because a good top means that a termination condition creates a full reversal. And then Joel, I think this is the same one. You didn't have your ATM in place, so you got out. No worries. And then you got back in and then you closed. You moved it too close and it got you. Yeah. Guys, it's just loss of momentum pushes higher. That's all it is. Yeah, and boredom is tough sometimes, Joel. I think it's a great trade. I just think that the guys in control decided to push higher. That's all it is. It's a cost of doing business. It's the right trade on all accounts. It just didn't work. That's okay. Let me see where I'm at here. Dun dun dun. Alinsky. Divergence long. Alinsky, do you have stuff on the chart that creates these, or are you writing it on there? The long trade I definitely disagree with. The short trade I think was a solid trade. Here you go, Paul. These are the areas that I'm willing to consider a termination condition. You may have a different opinion, and that's totally okay. These are the areas that I consider termination conditions as I teach the class. And those small swing one-to-ones don't qualify. They're yellow, right? No worries. So, guys, when we talk about one-to-ones, when we talk about large swing one-to-ones, this is a great lesson. Why at the midband? Alinsky, will you elaborate on why you think the midband was a better entry? Large swing one-to-ones are 100% Fibonacci alternates, and Paul, these are taken from big moves, right? These are taken, there's little fluctuations within the move. These are the ones most likely being used by the institutional traders, by the people. Like, this is a very common point to create support and resistance, which is why your chart prints these yellow one-to-ones. The small swing one-to-ones are going to create these points everywhere on your chart. Um, I don't use them personally. They can create a bounce, but if you go back and look at your charts, more often than not, they don't. But if they line up with an entry or with a termination, I'll let those add strength to it, if that makes sense. I'm not sure, to be honest with you. Um, I don't have 8 up, but if you go to your indicators, you'll probably see small swing 1-to-1s, and you'll have to make it false instead of true. So what I see here, and Alinsky, I'm going to go back to Fibs midband 1-to-1s. These are where trades happen, right? Fibs midbands are 1-to-1s. Um, your midband and your fib are 2 ticks off. Which one was stronger, right? Your 1-to-1s with all this momentum are the first place where the market is likely to bounce with all of this momentum. Does that make sense, Alinsky? The lowest point of resistance is where it's most likely to bounce when the momentum is this strong. And then the midband represents the highest point of resistance. And in this case, it just happened to go to the highest point. I love this trade. It was a 50-50 trade. Your smalls are through and your large are not. Does that make sense? The smalls have made it through with odds favorable momentum. Price hasn't reached this fib, but the large triggers haven't broken these, which means that 20 and 10 have the potential to break, but they haven't broken. Does that make sense? This turns it into a medium probability trade. No divergence, strong triggers, tells me, hey, take a shot at it. I think you took the shot at the best spot, the lowest point of resistance. Your stop goes outside of the window of opportunity, and the market heads all the way back down. This fib represents your trouble spot. It's not broken, right? Right at 10, it's not broken. This is your trouble spot. So when divergence prints at your trouble spot, it gives you the opportunity to jump ship, and sure enough, it pushes up to a higher point. Does that make sense? That's a 50-50 trade. Perfect execution. Exit at the area that hasn't broken. This divergence says we're going higher before we continue down. Solid trade. But you understand the concept of the window of opportunity. I think that's the best lesson on this one. I hear a lot of people get excited about midbands. Midbands, midbands, midbands. Any of those areas can create a bounce point. But because of the momentum, we're looking for the closest one to price. Great trade, dude. Solid work. I love it when the new guys are nailing it. Makes me happy. And then Snorri, let's see what you have, my friend. That's a weak bottom and a strong top. I agree. Closest to under the price. Perfect. Maybe I should change my verbiage. Maybe I should change my verbiage to enter at the area closest to price. I wonder if that would be easier. Oh, we may have just had a revelation. It makes sense to you. I'm going to use it. I'm probably going to use both, Alinsky, but thank you, because that helps. I will emphasize on that. Give me 1 second. Let me talk about Snorri's. Snorri's just doing some chart reading. Termination creates a full reversal. That's a strong top. Pivot from nowhere. That's a weak bottom. Strong tops tend to push the market down and continue. Weak bottoms love to get stuck at midbands, resistance for continuation of the direction. That's a great chart read. And then Chef, let me elaborate. And I'm going to get a really easy picture to elaborate with. Nope, that's not the one. Let me find the one that really kind of sums it up here. We'll do this. So we're looking at the long side, guys. Reversal bar prints. We identify the areas inside of favorable large triggers, right? So Chef, I've always said your window of opportunity extends from the highest point of support to the lowest point of support inside of favorable large triggers. We can all agree that that's what creates the window, right? And then Alinsky just kind of blew my mind here. Where do we enter in that window? At the area closest to price inside of favorable large triggers. The area closest to price inside of favorable large triggers. And it doesn't mean that it won't go to the area further away from price inside of favorable large triggers. But what it means is that with all that momentum, we want to take our entry at the top of the window or the bottom of the window, which is the area closest to price. Does that make sense, Jeff? I like it. I like that phrase a lot, and I'm going to incorporate that into the lessons. We enter at the area closest to price because of the momentum on the higher time frame. Oh, and then Alinsky. Oh, are you good to go? And Alinsky, I know you're a smart fella. So let me take this back to the rules, okay? I don't have any rules that discuss the changing of the midband color. I don't. I don't have any rules that discuss that. I'm going to go back to the super simple checklist. So let me take a picture of your chart. And guys, again, I'm not saying that it's not a trade. I'm not saying that it's the wrong trade. I'm not saying that what he did is problematic. But what I am going to do is I'm just going to go back to the checklist because I want to talk about advantages and defining the entry. So what I'm going to do here is I'm going to pull up your picture, Alinsky, and then I'm just going to put the rules on it. And I want you to see why I do this. And it's not to say that you were wrong, because it's your trade. It's not my trade. Strong top or bottom. Snorri pointed out this is a weak bottom. This isn't coming from a termination condition. So that's a no. But it's not mandatory if the rules are met, right? We can still have a great trade without a top or bottom. Odds favorable momentum on the 13-2. So Alinsky, my smaller above the larger wide. They're angled in the direction of the trend. I have, without a question, odds favorable momentum. Would you agree? Cool. And here's where I believe we get problematic. The price bars reached Fibonacci resistance. All of the trigger lines have remained below. So what you've run into, Alinsky, is a textbook termination condition. Could teach a class on that termination condition. So you have 100% given away the advantage of a clear path. Does that make sense? Not saying that your trade is wrong, but I'm saying but what you did is you turned it into a riskier trade. And then let's take it one step further. You entered here, but all of your triggers that price loves to come back and close the gap to are down here. So what you did is you're putting a lot of pressure on areas not inside of favorable large triggers directly into a termination condition. Does that make sense? And again, if you realized all of these as they were happening, and you said with the momentum, I'll take a shot to get back up there, well, then that's your right as a trader, isn't it? And ultimately, where was that? 1047-ish? It worked out, didn't it? Inside of favorable large triggers, Alinsky. That's the key. That's why words are so important, in my opinion. Because more often than not, this pullback comes here to areas inside the triggers. And there's going to be times where it just doesn't. And I'm going to tell you, if this fib wasn't here, I like your entry. But because this fib is here, and because it's from a bad bottom, this is a trade that more often than not is going to run you over. And let me see what happened at 9:33. And this goes back to trading patterns and advantages. And again, I'm not anti your trade at all. But even weak triggers cause deeper pushes, and I'm trying to find an example that looks similar going the other direction. And I can't seem to find one, and that's okay. And then it goes back into this right here. This is that price reaches support, the triggers haven't broken, it becomes a little difficult. So I think it's a great picture. I think that not being greedy on that trade paid dividends for you. But there's a lot of things to talk about from an advantages standpoint. And then only you can make the decision on whether or not you're willing to trade without the advantage present. Not a good bottom, but good and strong triggers. I love that word but. Not a good bottom, but termination condition, but I think it's getting even better. You think it would have been a good long trade because of strong triggers. Down here, GWC, can I ask you, do you think it would have been a good long trade because of the triggers? And you may have said that, but because the market continued all the way up, do you think it was a good long trade because what happened after the fact? And that's what you have to ask yourself sometimes. My rules weren't met, but it went anyway. Should I start taking that trade? And we've seen in the classroom a lot today people getting their butts handed to them from termination conditions, right? Guys, they break sometimes. But trading into them lessens your advantage. And the idea is to win more than we lose. So it's easy to say, man, I think that that would have been a great trade. But if you go back and look at the rules, it's easy to say that only one rule was met, right? And does that create an advantage? And is that what you're looking to take? Especially from a weak bottom. Does that make sense, GWC? And really, does that make sense to everybody? I'm not saying don't take the trade. I'll never tell you to not take the trade. But I'm telling you that your likelihood of success goes down dramatically when you trade into termination conditions. Your likelihood of success goes down dramatically when you don't trade from inside of favorable large triggers. And right here, termination condition, but you didn't even have strong triggers. They were weakening. But because it went up, you think it was a good trade. Does that? I hope that makes sense. This trade works every now and then, but it doesn't work more often. And it's so hard when you see it do what you hoped it would do. And that's the market trying to convince you to break your rules. That's the market going, hey, take that trade, man. It'll be okay. And then check this out. Here's another great example. And these don't really line up, I don't think. It's 1108. So this doesn't line up at all, Alinsky. That's that termination with weak triggers, right? That's large triggers aren't through. The large triggers haven't broke 50, they haven't broke 57, and they haven't broke a pivot divergence high at 59. This is three areas that haven't broken yet with weak triggers. Does everybody see it? Give me a Y if you see it. From a rules standpoint, this is a horrible look to go long. But that sure is a pretty look on a small chart, isn't it? And guys, it worked. This is the market training you to break your rules. Great entry areas with the large triggers inside of each other. No trade for you. I love it. Great read. Giving away the advantage of momentum and the advantage of a clear path gets difficult. But you noticed on Alinsky, on your other one, the advantage of momentum carried you up, right? You had a fighting chance with that momentum. I think this is a great read, and I think that no matter what happens next, it's absolutely outstanding that you respected your rules there. Good job. We're going to do this all day, guys. We're going to keep getting smarter all day. Who's next? Alan, let's see what you did, my friend. High probability trend trade. Enter at the area with the small triggers more than a full bar away. Entry execution error on reversal bar. Trade management errors. First exit because of fear. Second exit with second divergence. Fair enough. And it goes back to um, great entries, create manageable trades. And then Alan, you caught it, right? And guys, this is NASDAQ exclusive. It really is. When the small triggers are a full bar away, getting in at the area creates a more manageable trade. When the small triggers on the NASDAQ are closer than a full bar away, that's where they begin to act as support or resistance. So I think it's an awesome trade. And I think you have to trust the large chart a little bit, right? The large chart got you in, and then the small chart got you out. Two divergences against these triggers isn't a termination condition, just for everybody that's new. Two termination conditions is not an exit condition when your triggers look like this on the large chart. Three divergences can be. And if you had taken an exit right here, then that's pragmatic and rules-based. I think it's a great trade, Alan. And I think that you're just working on your entries a little bit. So, Alan, what I would encourage you to do is go back through your last 20 NASDAQ trades and look at the entry and just compare them to the triggers. And you really will. You'll have that light go on moment. That's what I had to do. That's what got me to that rule for my personal trading, is I literally had to go back and look at all of my losers and figure out what the heck was making me lose. And that was such a big part of it. It was such a big part of my study, and I'm glad to be able to share it with you guys. Joel, beautiful. If it didn't get you, that's okay. But perfect recognition, Joel. Joel, do me a favor. Type in the room. I'm good at this shit. You chart read as well as anyone that I know. Guys, that's only half the equation, right? Learning to chart read is the first part of the equation. Learning to control emotion and only taking trades when the rules are met, that's the second part, and that's the hard part. I want you guys to give yourself a little grace. It's not even about patience, is it? And this is the hardest part for us, guys. When you believe in your rules so much, when you are so 100% committed to your rules, it really will create only two options. It really will only create either the rules are met or they're not. But until you get to that point, and then that's where the patience, that's where the learning comes in, until you have so many repetitions that there's no way on earth you would ever miss this trade until you get to that point in your head. Guys, it's okay to miss them, but keep doing what Joel does. Go back and circle them and say, this would have been freaking awesome. Well, awesome. Got to say it out of your nose. Odds favorable. And you said that you're not trading into a termination condition, right? Let me see what this says. It's kind of behind there. This move is happening now in case. Instead of jumping in on a pullback, should you wait until you can create that window inside of the large trigger lines? What do you think, Chef? If you got a pullback right now, let's go through the rules. Are you ready? Here we go. Price reached the midband, right? I love it. Those large triggers are not a full bar away. They're closer than that. So the midband's not behaving as a termination condition. Give me a yes if you guys see it. We need to get your reversal bar markers on the chart. Cool. So no terminations and odds favorable. Chef, are the rules met on the large chart? This is how simple it can be. If I were to get a pullback right now on my small chart, do I have an area of resistance inside a favorable large trigger, Chef? I like saying Chef. I don't know why. It makes me happy. Since Johnny Rockets doesn't show up in here anymore, I have to say Chef now. Can we agree that in the event of a pullback right there in the moment, that these yellow 1-to-1s are in fact inside of those triggers? So, Chef, could we say without question that this is Rules met for a high probability trend trade. Let's look at it with our checklist. Strong top or bottom, not so much, right? But that's okay. Odds favorable, clear path, area inside of favorable large triggers. Chef, could we take this trade? Could we defend it in a court of law? And it never gave you the pullback. So when is the mid-band a termination condition? And that's the question that I was trying to answer, but sometimes in my head, I don't always answer it the way I think I'm answering it. Exactly. The large chart midband is only a termination condition. Chef, everybody else in the room, the large chart midband is only a termination condition if the large triggers are a full bar away. That's the gap theory. So if they're not a full bar away and that's the only line that you're worried about, couldn't care less about it. It's just a pink line. It might as well not be there. Does that make sense? Full bar away means that there's room for this bar to become a reversal bar before it hits those triggers, Alinsky. Notice how I'm getting smoother on your name every time I say it? Just saying. It's kind of cool. And Alinsky, this is the gap theory. It is, right? Novak is a very Czech name. I know that accent. Um, and this is the gap theory. Chef, give me a second and we'll go through that. So guys, the gap theory is designed to let you know when the midband is a termination condition because honestly, if you hit a fib, it's a term, right? If you hit multiple fibs and the triggers don't break, it's a termination condition. But if I hit a midband and the large triggers are above my reversal bar marker, it means that there's room for this bar to become a reversal bar. Does that make sense? And if there's room for this bar to become a reversal bar before it smacks into them, it's a termination condition. The midband is behaving as a termination condition. So let me go to my indicators real quick and let's see if we can find it. Reversal marker. I'm going to scroll up to the top. So Chef, right click, go to indicators. Time frame, support resistance, shape resort, Fibs Pro Trader, reversal marker 1. Mine says false. Do I not have it on there? I do have it on there. Show the rule is false. The rule is transparent so you don't see the math. And then show reversals is true. Show reversal price is true. So Chef, if you right click and go to indicators under reversal bar marker 1, show reversals is true. Show reversal price is true. And that should get you that white line on there. And if that doesn't work, we'll go to Jason and Tech. And then guys, let's find an example of two. Yeah, because you're on NinjaTrader 8. But the idea is the same. So go to indicators. T3 Fibs Pro Traders, that's going to be the one that you need to click on. And these are going to break down each individual indicator. You're looking for reversal bar marker 1. Guys, can anyone on NinjaTrader 8 give me that click and help them out with it? I don't have it in front of me. But Chef, I will be opening NinjaTrader 8 towards the end of class here. I can take a look on mine. Let me open it right now. So Alinsky, price reaches the area. See how the large triggers didn't follow, how there was room for a reversal bar? And sure enough, price comes back and closes the gap. You see this a lot. Typically at mid-bands. Not exclusively, though. You'll also see it at fibs. Almost a full reversal bar, and it pulls right back to it. There it is again, right into the mid-band. There's your reversal bar, a full bar away. So it just creates an opportunity for you to recognize these things. And understand that next long or that next short might not be, and this may have been the one. Actually, this is the same look. Beautiful bottom, reversal bar marker, full bar away into the mid band, and sure enough, it closes the gap. You'll begin to if you just scroll back on one chart, you'll begin to see it happen enough. There it is again, mid band, straight to reversal bar, room to get there. It's a great pattern. And for the new user, it just keeps you from taking that long trade, right? It keeps you out of that long trade. It's not necessarily a short trade. It's just saying, hey, let it close the gap. Let's see what happens. See if we can, there it is again. And this is when I teach the gap theory, I love to teach it to remind you guys that patterns repeat themselves all day, every day. Patterns repeat themselves all the time. And the more you spend time studying, the more time you spend looking at stuff, the quicker you're going to recognize it. Oops. Chef, I'm building a chart for you here real quick so that we can do this. I opened up my 8. I'm going to open up and I'm going to build a chart for you. Dun, 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 13.2, dynamic Rinko. Almost there. Because I think that reversal bar marker is insanely important. So I'm going to pull over. Oh, thanks, Zelensky. If I right click and go to indicators, oop, I'm still calculating. There we go. It does look different, doesn't it? So we're looking for the reversal bar marker. And let's see if Zelensky just saved me some time. There we go. T3 Fibs Pro Trader, reversal bar marker 1, show reversals, show reversal price. Thank you for that. Appreciate you guys helping out. So there's those pictures for you. And I'll close this out. And that'll help you get that reversal bar marker on there so that you can use it for the gap theory. Thank you, gentlemen. And then where was I? Paul. Good top, creeps to full reversal gives odds favorable. And then this is one of those 50-50 trades again, guys. This is smalls are strong. They're through the area, but the large are not. So this area has the potential to break, but it hasn't broken. One divergence tells Paul, I'll take it from the top of the window, not the bottom of the window. I know Paul's rules enough to know that that's what he's doing. So Paul says, I'll take it from the top of the window with the slowdown. And he gets in and he'll manage assertively. Good looking trade. They're checked, but it's not showing. Yeah, jump with Jason then, Chef. Sorry. And then Paul goes into this trade with the understanding that it's not a clear path, right? And that's the key. And that's Paul's chart reading says, I'm going to have to manage this one assertively because the path isn't clear. And sure enough, he takes quick profits. And then when he gets a second divergence, he exits the trade. Beautiful, Paul. Perfect management on a medium probability trade. And then Alinsky, we saw this one. Was there a question about it or did you just post it up? Okay. That's okay. Mistakes happen. And then Alan, it's a momentum trade. A good bottom. Target 1 error, but target 2 reached. Nice. Right at that mid band with the large triggers hovering below. I love that target instead of hoping for a fib. And then you just fudged it a little bit on the first exit. That happens. Yeah. Great trade though, dude. So guys, if the bottom's really going to be a bottom, if this is really going to turn the market, Alan lets the small triggers get above the large. He lets the large start to roll, and he looks for a little snapback to take him up. It's not a high probability trend trade. It certainly fights the trend, right? So there's more things that go into that with this chart reading. I like it. Nicely done, Alan. You've really gotten solid at those trades. Really gotten solid at those trades. It's fun to watch you guys grow. Why are you on the MNQ and not the NQ? Just curious. How much is a tick on there? 5 cents? Just working on it. Yes. So you're working on the process, not the result. You're working on being able to follow your rules rather than deciding to be rich. That's how you end up rich, Alan. Careful. I don't want that money to change you. I want you to still stay lovable. All right, so let's just watch the live market for the last few minutes. Let's see if we can read our charts. What's the trend, guys? We going up or down? We're going down. Do I have odds favorable momentum? No. Do I have a clear path? So I should go short or long? Are you guys suggesting that if my rules aren't met, I should do nothing? Do you see how easy that is? But do you also recognize if you've spent more than 38 minutes trading the market, how difficult it is? What's the trend on the S&P, ladies and gentlemen? Let's do the same drill. We're just reading our charts. We're setting up for a trade. Down. Do I have odds favorable momentum? Yes. Do I have a clear path? No. Is that why I didn't get stopped out of this short? Because I respected a termination condition? I promise you guys it can be this easy. I promise you guys that if you focus on simplicity and adherence to the rules, I know, Chef, I've done it a million times. The people who struggle with the software, guys, I'm going to tell you right now, I'm going to go on a soapbox to end the day. This is the best damn software on the planet. And if you find something better, send it to John Novak because he will buy it. He's not afraid to buy other plans. He doesn't think he's the only game in town. But I haven't found anything better. He hasn't found anything better. Guys, the software works. But more importantly, the rules that I teach every day, the simple approach to recognizing advantages works. That's cool. But you have to have a plan in place, and you have to be able to recognize when your plan is met. And guys, that's the one thing that Nexgen can't give you, is experience. Experience comes through simulation. Experience comes through taking pictures. Experience comes through getting feedback. I can give you the greatest elliptical on the planet, but you're going to remain a fat body if you don't learn how to use it. If you just hang your clothes on it, you're not going to lose weight, right? Awesome. Dwight makes me happy. And guys, I'm going to tell you that I teach the class, I read the indicators. I struggle with opinions too. I struggle with breaking my rules the same way you do. I've blown out Apex accounts. Guys, it's part of a process. You can't expect to be as experienced as someone 10 years ahead of you, right? You can't expect to read the charts in the moment if you've only been doing it for a couple weeks. So I'm going to use my wife's favorite word again. Give yourself some grace, guys. You're not looking for trades, you're looking for rules to be met. You're not waiting for trades, you're waiting for rules to be met. You're not hoping areas break, you're waiting for areas to break. You're not hoping that weak triggers carries you through. You're waiting for strong triggers so that you have the advantage of momentum. Those of you that are brand new, and I'm seeing it with you guys, Chef, D-Rock, Snorri, right? You guys that are brand new have this amazing advantage of not having to screw everything up the way I screwed it up. Because I teach this class from a place of me taking all of my problems and trying to keep you from experiencing them, guys. But this is where it all starts, and this is how we're going to end the day. To minimize your learning curve. And that's what we all want to do, right? We all want to get there yesterday. We all want to be great traders. To minimize, whoa, 20 is not 200. To minimize your learning curve, you got to post your pictures in the class, guys. You got to get that feedback. Every trade, win, lose, or draw, because if you win and the rules are wrong, we've seen that a couple times today. You may have a short-term victory, but long-term failure because your luck runs out. Um, and I'm going to give an example, and I apologize if it feels like I'm calling on you. We watched Alinsky trade into a termination condition and win, right? But what was the flip side? How many losers did we see in determination conditions? Alinsky is going to believe because he won that trade that that's the correct trade, right? But all of you other guys that took an ass beating trading in determination conditions are like, whoa, I'm going to avoid those for now. So we don't want you to get lucky, and I'll talk about it if you did. And it's not a negative. It's just letting you know that the advantages were gone. So you're probably not going to see that. You're not going to know the difference. You need the feedback. And I'm here 15 hours live every week to give you the feedback. And guys, I firmly believe, and not because I'm the educator, I firmly believe that the next gen approach to education is the most solid, comprehensive plan that you can get. It gives you everything that you need to be successful. It gives you live feedback every day. The only thing you have to do is swing those clubs, guys. The only thing you have to do is go to the driving range and keep hitting balls until muscle memory comes into play and you stop slicing, you stop chunking, you stop thinning, right? Get that feedback, get on the simulator, participate in class. The days of blowing out 20 grand learning how to day trade are gone. They're gone. Less than a minute. I love it, Chef. Dude, Jason, the only stuff Jason can't fix are things that aren't broken. True story. There's no risk of loss or capital anymore, guys. You can take all these great lessons and do it without that. You need someone to tell you what you did right or wrong when you're new, and that's what we do, guys, and that's what we offer. And if you're on demo right now, you're not going to be an amazing trader at the end of your demo, but what you are going to realize, hopefully through seeing other people, through conversations, is that we're committed to your success, and I'm here every day to walk you through it. So if you really want to be a day trader, guys, just buy the damn software. Buy the software, commit to it, because you'll get there. Um, Stop messing around, follow the path, and get to where you want to be. And we'll get there together, and it'll be a lot of fun, right? Hey, look, termination condition worked. And I appreciate that, guys. And the true story is I've gone through the same education with John Novak. I have posted my trades in class. I have felt sick to my stomach. And that's it, Snorri. Don't use the driver when the 7-iron works. And Snorri, you may appreciate this as someone that, that is exceptional at golf. I can't hit a driver. I can't hit a driver more than 210 yards. So I bought a 3 hybrid and started hitting at 260. I eliminated the driver. And then as I'm learning to swing the clubs, I started making a lot of mistakes. And when I started making a lot of mistakes, I eliminated the 3 hybrid because I couldn't hit it straight. I was knocking it out of bounds every time. And I literally don't play with anything larger than a 7-iron right now because I'm learning how to swing the clubs consistently. And that's the one that I can get the best contact. That's my high probability trend trade. And until I can get into the 80s with 7-irons only, and I'm close, I'm shooting 90, 91. Until I can get into the 80s with a 7-iron, I'm not going to incorporate the 6 because every time I do, I try to swing harder. I try to make it go further. I try to do more that I can't do. And I mess up my game. I mess up my results. And trading is the exact same way, guys. Stay in your comfort zone until it's so comfortable that you need something else. And I'm telling you, Snorri, I'm going to fly out. You and I are going to play golf. 3 rounds one weekend. And I'm just going to make you teach me something, dang it. Hey guys, that's it for me today. Thank you so much for being here. I hope you learned something today. I hope you broke a rule and learned from it. I hope you messed something up. And I hope that you study your trades tomorrow morning so that you can be a little better tomorrow. I'll see you tomorrow morning at 9 a.m., guys, and we're going to keep doing this every day until you get to where you want to be. Thank you for being here, and you guys take care. Be good.